I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Good morning and welcome, everyone. The agenda today is, or I should say, the next regular scheduled meeting is Friday, June 22nd, 2018 at 9 a.m. at the Island View Restaurant, 35468 Tea Time Circle, Sebring, Florida. Please silence or turn off your cell phones. Once again, welcome everybody. Today's meeting is essentially... Yeah, I know. Okay. Today's meeting is essentially a workshop as it pertains specifically to district funds. A couple meetings back we had the golf workshop, and in the future we'll have a combined workshop for golf and the district. Remember, this is just a workshop. It's nothing cast in concrete. So with no further ado, I think we got Tanya's Omar's going to go through this, or are you going to go through it?
I'll let Omar start, and I'll chime in if we have any certain questions, but I'll let him start the presentation this morning.
Also, just as a brief comment too, it is a workshop. We will entertain comments at the end of the session. I emphasize the end of the session. Okay, thank you.
So, good morning, Supervisors. Omar DeJesus, Finance Director. I'm excited. This is our first proposal for the General Fund and Utility Fund budgets for the 2018-19 fiscal year. We'll go through the workbooks page by page. We've lined it up with a PowerPoint, so at some point in time on certain pages, I'll have you look up at the screen, show you some animations, and then come back and forth, page by page, all the way through. First couple pages, first page 1 through 3 starts off with what Sun and Lake is and what are special districts. So some of these are just introductory pages that explain what we are, what services we provide. The next page after that is what is a budget, explains to the general public what the budget process is and what the budget explains, just to give them a good understanding for those who maybe haven't been a part of this process before. Page 5 is what is a fund. Once again, we're going over the general fund and utility fund. In government accounting, we do separate everything into funds in order to keep track of revenues and expenses. So that's just another informational piece. And then page 6, 7, and 8 is the benefits derived from levying assessments. Does anyone have any questions on those first couple pages?
I'm fine.
Okay. So table of contents, we're going to go through the general fund, operational budget, revenues, and expenses, and then after that we'll go through the general fund capital items in greater detail. Okay? So the first page on 10 is the summary. It shows you all the funds that we were proposing this year for the budget. We have 4 funds that we're proposing. We have the general fund, utility fund, golf fund was discussed previously, and in this budget we also have a capital projects fund for the kitchen renovation project. Total budget this year is $13,611,500, which you see on the right-hand side in the total section. That's what we plan on taking in as revenues and expenses. Okay? Any questions? No? All right.
Yeah, I didn't look at it. How's 13.6 compared to previous years?
So let's go to, we'll get there on page, let's see.
I think I have that information if you can't put your thumb on it right away.
Do you have that?
Yes. If he's talking comparing it to the last 10 years for an example?
Correct.
Yeah, I can give you a rundown on every year, what it was if you want. I can rattle them off, or you can put your thumb on if you have that document.
Yeah, I think you just want to know past 2 or 3 years.
I mean, is it in the ballpark with other years? Is it high? Is it low?
Go ahead and ramble a few off.
Okay, from 2011 was $8 million. 2012 it was.
Okay.
2012 was 10,194. 2013 was 10,294. 2014 was 9,926. 15 was 12,176. 16 was 13 million. 17 was 12,324, and 18 was, this current year is 10,873. You know, and there's a small amount, a couple $100,000 on the end, so. The last 4 years, I would say, are fairly close, and it also has to do with the types of capital projects we've had.
Right. The maintenance facility was something that, increased the budget the
Right.
last couple of years, but this year is smaller.
The maintenance was in which year?
It was in
3 years ago,
16 and then 17.
16-17 budget, which is 13 million.
That was all the whole 1.7 went in there?
1.2 went into that budget, and this year's has 500,000 of that, because we couldn't finish it in that fiscal year. So we spent 1.2 in 16-17, and then this year we spent 514,000 to get to the 1.7 that the project.
And I know we're going to get to this later on, but there is a significant change in terms of the funds that we're transferring from reserves.
Correct.
Over the past years. Okay.
Once again, once we get onto those line items,
That's fine.
We'll talk about them a little bit greater detail and give you guys some more explanation and hopefully make it crystal clear.
Okay, thank you.
So the next, page 12, 13, 14 is the memo. We're going to skip over that. As we go through the process for each fund, I'll mimic my memo and explain some of the changes and why we've increased certain line items or decreased them or eliminated them. So the next page I'd like you to turn to is 15. There's 3 charts on that page. We're going to go over the first one. The first one shows total reserve balance at the end of every fiscal year. So that goes through 2017. If you look at 2017, we ended last year with $8.5 million in total reserves. That includes the general fund and the utility fund reserves and operating accounts. That's total cash on hand, $8.5 million. So let's go to the middle section. The middle section, I've broken that total reserves into the two buckets, the general fund and to the utility fund. So we're looking at the middle line graph. In 2017, the general fund finished with $4.5 million in total reserves. For 2018, we're predicting that that's going to stay about relatively neutral. We've done our estimations on what we're going to take in revenues and expenses, and we feel like that's going to stay about break even for 2018.
On the general fund?
On the general fund. So we're in that middle section, that middle graph. So we're going from 17 to 18. It goes from 4.539 to 4.574.
Okay.
That's our prediction. With the current budget, it's going from the 4.574 down to the 2.7 million. That's because we have 1.8 million in this budget coming out of general fund reserves. That's for, we'll touch on every item, but it's mostly for the kitchen expansion project, golf subsidy, and golf capital at this moment.
At the end of the year, it's going to be 2.7.
It's going to be 2.7 if we hit everything according to budget based on the budget we have now. Our reserves will be at 2.7. I put a red line at the bottom that shows what we recommend our balance is. So even though it's going down dramatically, we feel comfortable where that number is. We're okay going all the way down to about $2 million in operating reserves for the general fund, which gives us about 6 months of operating revenues. So we have some money to spend in the general fund, but it's going to take a big chunk this year. So next year, if we want to go back and pull from reserves that won't come from the general fund, it's going to be coming from URIF or increased assessments or increased revenues or cut costs. We're going to have to get a little crafty next year if we stick with this current proposed first draft. Does that make 100% sense?
That includes the golf.
That includes golf with what they're proposing, the $551 in subsidy, the $370,000 in golf capital, and the $900,000 for the kitchen project. That's if we pay for it all cash out of reserves. So we're going to come back with some other proposals as far as taking a loan for the kitchen expansion to save on some of that cash flow so we can keep our reserves and extend that lifespan a little bit longer. Is everyone on board for the general fund so far? We're at 4.5. We're predicting another 4.5. With this budget, we're going down to 2.7 in total reserves. Okay? Right here on the
We will be discussing this.
Yeah, we will.
I mean, eventually, are we going to get to a chart that shows with what everybody has asked for in capital?
Yes, we're going to, like I said, this is just the groundwork to kind of explain where we are with budget, how much we're asking for, how much is coming to reserves. This is the footprint before we get into the details of what everyone's asking for and where, how much.
I mean, I'm talking future capital. Because if we end at 2.7 now, that could be good, but if we need a whole bunch more next
Correct.
year and the year after, that's
Correct.
probably not very good.
Right. And we do.
Do we see that in-
there's some major projects that we need to keep an eye on, and that's why we're going to come back with some more proposals. Right now, we have the irrigation project we know is earmarked out there. We know we need to do something. We don't know what that final product's going to be. The district office is something that's all in the books that needs to be addressed. So there's some long-term projects coming down the road that are in the millions of dollars that we need to keep planning, not only for this year, but make sure that we're going in the right direction to get there next year and the year after that. Does that make sense?
Unfortunately.
We'll see after.
This is just
When you tell
page
me where it's
15,
coming
so
from.
bear with me. So that's general fund. Let's go down to the last graph, which is the utility fund. And this is where we're kind of balancing, reserves and money. So the utility fund for 2017 was down at $3.9 million. You saw a dramatic decline from the 4.8 in 16 to 17. Once again, we took about $1.2 million out for the maintenance building that year, so you can see that decrease. We're projecting for 18 it's going to go up. We don't expect all our reserves to be used based on the budget. And then for 2019, we feel it's going up again. So the utility fund has $4.3 million as of this budget, 2019. We are at the recommended balance of $900,000 for unrestricted, but the URF of $2.7 million is fully available to spend. We don't have anything earmarked inside the utility fund at the moment. We know that there's going to be some long-term expenses as far as new plants, but we also know that we can get some grant funding from the state at 0% interest, which gives us some leeway there as far as having to spend cash, our own cash. When we're able to use those state funds at 0%, it really makes a lot of sense for us to do that. So once again, we have a good amount of reserves in utility fund. The question is, where are we going to allocate those, and how much are we going to use of those funds towards golf capital projects, district office projects, coming from that year pool.
So out of the 4.3, 2.7 is Europe?
Correct. So in that little red box, $900,000 is operating or unrestricted, 2.7 is Europe, and then we have $378,000 in impact fees.
And that's how you get to the 4186, right?
Correct. That's that 2017 number. I'm showing you 2017. We're predicting 2018 and 2019 is the current year, and what we're predicting for this budget. So those are just predictions, so I can't tell you exactly what that allocation is going to be for Europe and impact.
I mean, the Europe is a set number. It goes up so much every year, right?
Correct.
And right now, you're estimating at the end of this year, it's 2.7. And then there's 2 more years they add in.
Right. And every year we budget $530,000 to go back into that year fund. So once again, every year if we pull from reserves, your operating unrestricted number goes down if we use money, but we're putting money into the Europe, so it kind of offsets that total balance. So once again, let's say at 2018, with us putting in the $530,000, that 2.7 number is going to be roughly $3.2 million in your reserves at the end of 2018.
Go ahead.
Any questions? All right, page 16, we provided some revenue expenses, just a line graph, just so you can see. The red indicates expenses, the blue indicates revenues taken in. Starting with the general fund at the top, you can see revenues have been pretty consistent, right around the 3.97 mark. For the 15 and 16 fiscal year, you can see that expenses were greater than the revenues, and then 2017 was almost break even with revenues just being slightly above. So pretty good, just visual to see that we're spending the money that we're allocating during the budget process, and it's pretty consistent at break even for the last few years. Utility fund, you can see where the utility fund really is thriving. The revenues are far exceeding their expenses, which gives us the ability to put that $530,000 away into that year fund. So you can see that gap between those two lines is how we're able to accommodate that savings.
But as you stated, we are going to have some expenses coming down the road that we'll have to draw upon that utility fund and the Europe fund.
And that'll be some part of the utility discussion is, at what point in time do we want to stop funding that much into that Europe and maybe use that to fund some of these larger projects? So instead of saving $530,000, we may be able to reduce that to $230,000 and use $300 to go to the general fund for some projects, because once again, the URF is at a $3 million reserve balance. We don't need to keep putting in $500,000 with no intention going forward. It's at a good balance now. So we have some options as far as using some of that money.
Well, that got me confused. So you can move you would move the URF money into the general fund budget? And then
That's an alternative. That is an
No, I
option.
mean, that's an option.
Correct.
You don't just take it out of the URF and use it, you have to move it first, and then,
We can do it out of the URF. Like I said, for the capital projects for the last 2 years with the maintenance building, what we've done, because the general fund pays the expenses in advance, it's just easier the way we do it for accounting wise. So we take the money, we transfer it into the general fund, and then from the general fund into the capital projects. So it's just the way we do it internally for accounting purposes, but in theory, it's the same thing, taking it from URF and paying it for the project. Okay? And then the golf, you can see the last graph. Golf has been running at a deficit. Expenses have been higher, exceeding the revenues, which is why the subsidy is in play every year. Okay? Page 17 is a graph of what we transfer to the golf fund. You guys have seen this graph before. It was inside the golf budget. So it's pretty straightforward. Some of the totals there every year of what we spend and give to them as far as operating in golf capital and kitchen equipment. It's been pretty consistent. So once again, that's just for informational purposes. Go ahead.
It's been pretty consistent over the years.
So for 16 or 17, we spent $600,000. 18, they're proposing, we have 715 budgeted. 2019, 857. So you can see there hasn't been a huge fluctuation. There was one big fluctuation back in 2015 where we spent $1 million. But for the most part, you can pretty much see 800,000, 700,000, 600,000. That's kind of the normal.
Well, we went from
transfer.
430 to 607 to 715 to 857.
Yeah.
That sounds like it's trending a little bit upwards.
It's trending
to
a
me.
little higher. Once again, the last two are budget amounts.
Okay.
So that doesn't mean that 857 is going to be the final figure. That's just draft one.
But I'm saying on paper, it's trending upward.
It's trending up, yes, correct. 100,000.
so I guess it's safe to say golf is really the drain on us.
Yes.
That's for the record.
In the past, it hasn't been that we've been able to accommodate it a lot easier. But for the last few years, we've been paying more attention from the general fund as far as drainage and road paving. And as we do more in the general fund, makes it a little bit more difficult to continue that.
I do have another question on page 10. The kitchen, isn't that part of golf?
So what do you have, the summary page?
The $900,000 that you've allocated for the kitchen under what you'll call a capital projects fund.
Right.
Shouldn't that be under the golf? Isn't that part of the golf?
In theory, it's part of the golf, but it's such a large expense that for accounting purposes,
I
we
know.
have to.
But don't we want to see how bad it really is in that column?
In theory, I can understand where you're coming from, but I
not in
wouldn't.
theory, it's
It's
an
not an
actual-
operational expense. It's not. It's a completely separate project that we're going to do to enhance.
But it's under golf.
I understand.
Well, I think it should be put under golf.
It's just like it's like the maintenance building. The maintenance building is most likely a golf and roads department, but we didn't allocate it to the roads department to
know.
show that they
I was-
spent $1.7 million.
I wasn't here for that one. I'm here for this one.
Right.
I think it should be put under golf because we're spending X amount of money on, the food and beverage numbers are in the golf.
Right. Well, just from an auditing standpoint, and I know the auditors are going to take that figure and they're going to pull it back out. We can do what we think makes sense
Why would they pull it back out?
because
Because
it's
of
a
our
capital
accounting
project.
standards, government accounting standards wants us to include projects like this in a capital projects fund. So it's nothing that we just made up.
But there's
This is-
capital funds
So the
in
capital-
golf monies, right?
But it needs to be separated, and our our auditor, will require it anyway. So what we're doing for budget, we have to be able to budget in a capital projects fund. So I agree with you, it's part of golf, but for accounting purposes, this is the way we've got to set it up.
So we have capital money allocated under the golf fund, correct? For equipment and all that kind of stuff?
I don't know what
That's
this,
capital funds, right?
I don't know what this room has to do with golf. I mean, other than that's the way we account for it.
Right.
But really, the this isn't we could have a golf course and not have this building at all. The only part of golf that has to do with this building is the end down there in the pro shop.
Right.
So
No,
really, if you were doing business accounting, this would be a restaurant. And not only would it be a restaurant, it wouldn't be in the golf fund, and you would have a percentage of the overhead going to the restaurant. It all gets muddled together in this, which is, it's very difficult to sit down and look at it and say, well, that's golf and that's restaurant. You really don't have all the expenses for this building are lumped into the golf fund. So you should, but you're right, and to this extent, it should be consistent. If we're going to put it all together, we should put it all together. If we're going to back it out, we should back it out so that we know what the restaurant's actually making or losing, and the golf as well.
Dan, I agree. I wouldn't have a problem just separating the food and beverage totally from golf. And
Right.
putting this, the cost of what the repairs or the restaurant would be, putting it in there. That's fine.
For
That makes more
consistency,
sense.
yeah, for consistency purposes, it really throws a curveball when you try to include this into those revenue expenses, because you want to go back and track how much their real loss was. If you throw in a $900,000 expense, the next year is going to look great, because you got $900,000 that really wasn't an operational expense. Now, the capital items that we include in the fund, like equipment, we know that those are going to be recurring items every year, and they're going to be consistent, and you guys can track. Last year you asked for this year you're asking for something else. But throwing in a one-time project that you won't do ever again, maybe, or another 10 years, really doesn't make sense from a consistency standpoint when you guys are looking at these financial statements, or residents looking at the financial statements and trying to get a picture of what their operational income or net loss has been for the last 5 years. They're going to see this huge deficit in 1 year, and they're going to ask, why was that? Why is that a part of that? It's just going to throw your figures off.
That's what we're trying to answer too.
Right, so that's why we keep it separate for those purposes.
I think they got to be, I think you got to paint the picture as it is. That's just my opinion.
I respect your opinion. So we'll go ahead and go on to the next page, page 18. Another graph just shows annual assessments collections. Once again, I think this one shows just a pretty good picture that we've been pretty consistent year over year on what we collect as far as assessments. So we're predicting the same assessment collection ratio for this first draft budget. All right, so now we'll get into the actual budget document, page 19.
Let's back up one second on that. On the last graph.
Yeah.
Just a quick one.
Yeah.
So you have assessment revenues collected and projected collections. The projected collections are the delta between $3,051,000 and $3,490,000. Is that because we haven't collected them as of yet, or?
Correct. So when we prepare these numbers, the
Okay.
$3,051,000 is as of March 31st. So we still have 6 months in this year
Okay.
that we weren't accounting for, and we just made an estimation. Right now, as of May, when I looked at the financials, we're at $3.2 million in assessments collected. So
Okay, thank you.
we feel like we're going to hit that 3.49 figure.
And then the other potential for change will be the outcome of the GAI assessment and our reaction to it.
Correct. So page 19, getting into that discussion, once again, we did budget the assessments again at $3.5 million. We kept that the same. Just for this first draft proposal, we're still working with GAI on the methodology review. We will be coming back with different proposals as far as rates and what we recommend, changes on the vacant. And once those are reviewed by the board and approved, we will make those necessary adjustments to the budget, whether that's an increase in assessments or a decrease in collections.
Just as a sidebar question, I guess, do we have anything at all back from GAI? Or are we not going to see any of that until they present it?
I'm going to provide that to you for the next board meeting, so it will be in your packets.
So you have it in hand today?
I don't have it in hand today,
Okay.
but I will have it in hand for you for the board meeting packets for
Okay.
June 22nd.
All right, thank you.
Daniel, that would be untouched though, right? We'll get it directly from them, or what they give to you?
It's going to be
Okay.
directly from them, yes. And they'll have a report to go along with it, some sort of a recommendation and memo to go along.
But it is a final report.
Well, it's a draft until the board, adopts it or doesn't adopt it. I mean, I look at it as a draft, and he plans to do his presentation on July 20th. Is that the board meeting day?
Yeah.
And that's where, of course, he would be available for questions. In fact, if he's available for questions, prior to, but for the board meeting purposes, he'll be here on July 20th.
In all fairness to, for the rest of the board, because we can't discuss this, but we had attempted to get him in here on more than one occasion because obviously that methodology could come into play in this budget. So we're holding up some ideas in this budget until we get his report. I don't know where the breakdown was. All I know is we couldn't get in here. We attempted multiple times to get him here. So it's not for a lack of trying that we haven't been able to get him here.
So going back to the operating revenues, we budgeted a 1% decrease at $3.8 million compared to the $3.9 that we budgeted last year. Some of the major changes is the GPS advertising revenue has been eliminated. That $1 golf transfer for the GPS units and all the advertising money has been paid back to the district in full. So going forward, depending on what we keep with the GPS units, whether we're going to continue the advertising or not, or eliminate that completely. If we do, then golf can keep that revenue. If we don't, then it's just a wash on either side. We've made some other adjustments in some of the other line items to get it closer to actuals. So interest income, the year 16-17, we're at $26 million. This year, we think we're going to be about $50,000. We've hedged it at $40,000. The reason why we've done that is, once again, we're pulling a significant amount of reserves with this proposed draft. So until we have a definitive answer on what we're going to do with those reserves, it makes it difficult to predict exactly how much we're going to have to invest and hedge that interest income. So it is trending higher than the years past.
I'm sorry, go back, the GPS, why is that not in the golf?
So that income was golf paying us back for the GPS units that were purchased from the general fund. There was an agreement, a resolution for them to pay us back $1 per round plus any advertising revenue that came in. That's been paid in full now, so it's staying in the golf fund and not coming to the general fund anymore.
Wow. We do a lot of give and take between ourselves.
And then the last number that really sticks out on the revenues page is the $1.757 million. That is what we're taking out of prior year reserves in this first draft. Once again, we'll touch on what's included in that 1.7, but it includes the kitchen renovation, golf subsidy, and golf capital are what total that amount.
It's only a mere 128%.
Yeah.
There's a small number that I'm just curious about, the miscellaneous revenue?
Yes.
What's that?
So miscellaneous revenue, we've taken a look at that account, and that kind of just, there's a few things that go in there. Our sales tax allowance every month, we get a certain credit for filing our sales tax electronically. All that money goes in there. Anytime you go and purchase a resident ID card, that gets allocated there. Anytime we sell our assets, so when we do surplus and we take gators to the auction, that money goes in there. And then, it's just other miscellaneous items, like we hosted the Dale Carnegie training, and we charge other governmental entities to be a part of that. That money goes there. So anytime we can't find a specific bucket that makes sense, it's going into that miscellaneous.
I'm just curious.
So it was $20,000 last year. We bumped it up to $45,000. It's been trending somewhere around $70,000 and $40,000. So we feel an increase was needed in that line item.
The total operating revenues, you're satisfied to submit to us a decrease of 1%? You guys are satisfied with that?
Right.
Huh?
So last year, something to take in consideration too is the 3.9 includes insurance reimbursements. Insurance reimbursements is something that we plan on getting every year. We don't want to get insurance reimbursements. So that's $88,000 right off the top if you take that out. $30,000 in GPS. So if you take out all those things, we're pretty much in line with where we were last year. Maybe a slight increase.
I mean, personally, and we can have a conversation if you guys want to, I don't see how we can accept the 1% decrease with all the monies that everybody's asking to spend. I think it's ridiculous.
Right, and I think that'll straighten itself out. Once again, once we finish our GAI consultant review, if there may be some proposals to increase assessments, and once we work some of those kinks out, we'll see where we're at as far as.
I mean, 2016 and 17 was even higher. Right. So we're over $130,000, $140,000 less than that.
Right. No, I agree. Once again, you've seen the actuals, you see the estimated actuals. I'm not sure where you want to try and pull extra revenues from based off prior history trends and estimations.
The 16, 17, you had $113,000 worth of land sales, and we're budgeting zero.
Correct. So in this year, if you notice, the estimated actual for this year, we've only sold 10,000. So 16, 17, we start off with a bang, sold a ton of land. It's starting to, trend off. We just don't have the inventory that we had before. All the good inventory is kind of scarced off, and now the county's kind of taking that position where they're selling all this land in Unit 16, which is a lot more attractive than what we have to offer. So we're seeing that go down. I'm not sure that we'll sell any land in this upcoming year.
Okay, following that same line of reasoning, then if the county is selling a bunch of land in Unit 16,
Yeah.
if they're not paying us any assessments on them, they're selling them to somebody who's going to start paying us assessments, our assessment revenue should be going up correspondingly.
Correct.
We're not budgeting it.
Right, in theory, yes. Once again, we use past history collection ratios and what we're collecting. The theory is that they're going to sell 10, 15, 20, 50 lands. We can make a guesstimate. They just put up 20 for sale, and they got 4 bids. So, theory would tell you everyone's going to go out and buy these lands because they're selling them pretty cost effective, but it's not coming to fruition the way they expected it to either. So we're still hedging on the side of conservative, which I agree with. If it does come through to fruition, all that does is help our cause with revenues and reduces our liability to use savings or revenues.
I'm good with that, but if we're going to be conservative on if we're going to be conservative on our revenue assessments, then we shouldn't be as aggressive on our expenses.
Correct. Right, and that'll be the fun part through this budget process. Like I said, this is draft 1. We're going to come back with, what is a priority, where do we want to cut, and get it back in line to where we feel it's acceptable.
Let me ask you about the penalty income account.
Yeah.
Why would you plan that lower? I know you planned it higher than the budget, but it's lower than the previous 2 years.
Right. So 16, 17 was 71,000. This year we are estimating 70. Once again, we've increased our collection efforts. We're doing more foreclosures. We're going after vacant land that we deem acceptable. So with that same theory in mind, as we increase collection efforts and that word gets around, we're expecting people to pay in a more timely manner so they don't incur these additional costs and penalties and interest. We want people to pay on time, and we're trying to do what we can to encourage
If you think we're going to get more money through doing this, it's got to be shown someplace. Where would you show it?
Well, the only time penalties come in is if people don't pay on time.
Well, if they pay on time, then the assessments will go up, correct? The total?
No, because you're getting the same assessment dollar whether you get it in March or you get it in August.
So if
it's the same assessment amount coming in. What you're getting is the extra penalty income.
So if they pay on time, we lose money.
Right. We want them to pay late, yeah. We get extra money. But once again, we want the money up front too. So once again, we've increased collection efforts. We're trying to get the word out. We've added people to escrow their property so they don't have to come out of pocket at the end of the year. We're being more proactive and trying to be give informational guidance to the residents so they're paying on time and not put in that position to have those penalties incurred.
Just as a philosophical discussion,
Yeah.
we're going to be sitting here taking a look at whether or not we need to raise assessments based on these numbers.
Right.
Okay, so if these numbers are $100,000 low, then we might be pushed to raise assessments more than we really need to. So I would like to see a more rational assessment number used. I mean, if we know that the county sold at least 4,
Right.
then that's, it's not going to make
It's not going to, yeah.
$200,000.
10 properties. We're talking 10 properties at $400. It's $4,000.
Right.
We feel these are accurate numbers. If we made no change, kept our current assessment methodology, these are the revenues we can hedge, and we know for a fact we're going to hit for the upcoming year.
Okay, and I'm good with that. I just want to make sure that
there's
we're...
deficits, that's where the potential increase or decrease will come during that discussion.
Right. I just want to make sure that we're all on the same book and page, that these are reasonable assumptions.
Correct.
Because the next step's going to be, we're going to take an axe to some of these
Right.
requests, because, you know, it ain't happening, we're going to lose $600,000 in the golf fund, I can tell you that. Or I don't think we will. I would never vote for it, so.
Okay.
I want to make sure we got good revenue numbers.
Yes. Yeah, we feel comfortable with these numbers. Like I said, we've done the assessments, we've done the analysis on land sales and penalty income. We've looked at every angle. Once again, we are hedging a little bit on the conservative side. We're
that's
just trying to push it, but we feel comfortable with an accurate number,
Okay.
with the numbers you have.
It's actually on the next page, so maybe you'll be able to explain.
If there's no more questions on revenues, we can go ahead and flip to page 20, which is administration.
You're upping the fees for foreclosures and liens
Correct.
considerably, so you must have some kind of plan.
So once again,
Or
it
a
looks like a
thought process
substantial...
as to whether or not we're going to go into more foreclosures.
Well, the fact is that we have. So if you look at the $85,000 that we've budgeted, last year's budget was only at $40,000.
Correct.
But in 2016-17, we spent $60,000, and this year we're predicting we're going to spend $70,000. So we're already spending more than the allocated budget. What we're doing now is getting it back in line, and once again, we do have some new ideas as far as collection efforts for the upcoming year. So we're getting it back. We know we have to be somewhere around $70,000 from the 40, and then we've budgeted an extra 15 for some extra collection efforts that we're going to come back to the board with.
It's a little bit confusing. You're comparing budgeted numbers to budgeted numbers instead of budgeted numbers to actual. So you're...
Well, I think you guys need to see the budgeted versus budget, not budget versus actual, because once again, we were only allocated $40,000 to spend. We've overspent that, but we've made that difference up in other places. So we want to get budget to actual should be pretty consistent. Where you see that trend difference is where you should start asking questions and say, Omar, why did we spend 60 when we budgeted 40? That's the question that you guys should be asking as far as comparing actual to budget. Because the budget is what you guys approve. You guys don't approve the actuals. You guys give us a number to try and meet, and then we go out and try and perform against that number as well as we can. So we give you those comparative budget to budgeted. The estimated actuals and actuals are there for you to see, did we perform accordingly? Were we efficient? Did we get accomplished what we wanted to get accomplished with the monies that you guys allocated for those items?
Yeah, and I think all we're saying
both sides, but I can see where it can get really confusing if I put two percentages there for estimated and for budget. But we can do whatever you seem fit. I think it'd make it more confusing if you add another percentage in this spreadsheet. There's a lot of numbers there already as it is. Adding another percentage, I'm not sure that it provides a lot of assistance.
Okay, you're going to jump down to equipment on that page too?
Yeah, so a couple other things. Legal fees, like you said, legal fees was one of the things I touched on in regards to the foreclosures. We've decreased the general legal fees to offset that increase in the foreclosure fees. So that was a small offset. There is an increase in the foreclosure, but I wanted to touch on that. One thing I want to touch on that doesn't look like a significant change is life and health insurance. There's a 4% increase here, and it varies throughout depending on how many employees are in that department. The county is currently proposing a 9% increase in our insurance rates, so we've hedged for 4%. We're still in negotiation with Florida Blue, with the insurance committee, to see if we can get that down a little bit more. So that's why you see throughout the budget, you'll see a slight hedge for premium increases in life and health insurance.
Life and health.
Life and health, basically health.
9%.
9% from the county insurance plan is what
The
they're
one that we
proposing.
signed up for last year
Yes.
because it was a great plan.
Yes. And we're still trending, like I said, the 4% is in this department, 4% is $750. Last year we saved $100,000 in budget. So we're still doing a lot better than we were before on our own plan. Once again, it's 9%. That was their first proposal. We're going back trying to hedge that down. But I just wanted to mention that you'll see that pattern throughout the budget in the general fund. And then workers' comp is another one. You'll see some increases. We currently have workers' comp, property and casual, all of our insurance liability out for bid at the moment. We're supposed to be getting proposals tomorrow. We've extended that to June 25th, I believe. So that's out. So we are hedging for an increase in premiums based on that. In addition to, there was a workers' comp case that went to the Supreme Court that's uncapped all the attorney fees, that's causing all the insurances to increase their premiums, so we hedge for that. And obviously, property and casualty, we've hedged for that a little bit because of all the hurricane expenses. We expect some premium increases because of all the expenses and claims that we've had to incur because of the hurricane. So those are just 3 line items that I want you to just be cognizant about as we go through this budget process. You'll see slight increases in all those.
Speaking
Omar.
of that, go ahead. Go ahead, Mike.
Omar, I appreciate your answer, because I got life and health insurance all over these pages.
Yes, sir.
When they went up, do we expect a trend of this now, after we save
We
so
don't.
much
The
money?
county, before we joined the plan, did not have a rate increase in 6 years. So that was pretty typical for them. This last year, they've had some major claims. So
We joined.
once again, we're hoping that it gets back in line, and we don't see that, but once again, we're still performing on this plan a lot better than we were doing in the past. So some of these increases, like 4% here, $750, and that's based off.
And it goes
I
back-
agree with your answer, but that's
Right.
not very comforting.
Right.
We're doing better than what we expected.
Right. Well, like I said, they haven't had an increase in 6 years. I gotta say,
The
going
major
through
claims have really,
Right.
Yes, major claims, they've had
yeah,
some
there's
major
some major
claims.
claims, meaning
We had an
they could
increase
have
in
had
1
cancer,
year.
heart attack,
Yeah.
whatever those claims are, really increase what we're expecting, so.
And that's really the biggest factor that you try to take into consideration is we provide this insurance. We don't know who's going to get sick and who's going to have a catastrophic event. This year we had an employee who basically had a minor heart attack and was in the hospital for a long time. So those things come into play that you can't plan for. The district typically has had great consistency as far as not having dramatic major claims as far as its health insurance. So
Or the joys of being in a risk pool.
that's part of it.
Speaking of the hurricane, do we anticipate getting any money back this year? Or next year, whatever the fiscal year is? And if so,
Yeah.
how much do we think we're going to get, and should we not put that in the revenues?
So as those funds come in,
Yeah, FEMA.
what's going to happen? Right now, you can see in the hurricane line item, we've spent $230,000. We've only budgeted 30. So if we get any money this year, we are going to allocate it and increase that budget to get it more in line to what we actually spent.
But we could
next
be getting
year-
6 figures.
Next year, we're going to do the same thing. We're going to bring you back a budget amendment, increasing revenues and increasing the expenses. So yes, we are going to include that revenue once we receive it, but we're not going to hedge for it in advance.
And the expectation is how much and when?
Once the FEMA process, insurance for the most part is settling their claims, and we're pretty much done with them. FEMA's the one unknown. They're submitting through FEMA project by project. So, for example, we submitted a Category B emergency project through. It was for $75,000. That's the first one to go through the pipeline. Then the next one will be all the manholes for $40,000. So as those go through, we're going to receive 75% of those costs. I believe at a previous date and time, we submitted a spreadsheet that said we were going to receive somewhere around $200,000 back from FEMA based on the 75%. The problem is we don't know when. FEMA's been a tedious task.
Could it be longer than 18 months?
We would hope not. We would hope.
I mean, because the budget ends on September of 2019.
I've heard governmental entities that have said they waited 3 or 4 years for funding from FEMA on
Well,
projects.
I would think maybe we should take some of it and put it into revenues. I mean, we've got a situation here, if we think we're going to get 200,000, maybe we take 100,000 and call it a revenue.
But what if we don't receive the 100? That's what,
we don't know
the problem with
if we're
doing that is
You know
you're
what? We may have another hurricane, what are you going to do then? I mean, you can't,
Same
you have to
situation.
be realistic. Everybody's asking for a lot of money.
Yeah.
And I think to what Dan said before, I think we've got to state our revenues as accurately as possible.
Right. And
So
we
we
will
can
be
make
making them.
decisions.
We will be making them accurate. The problem is we're going to do it as we receive those funds, just like we did with the insurance reimbursement. We increased insurance reimbursement revenue and came to the board and said, "Here's the insurance reimbursement. Do you want to spend this on the roofs? Yes or no?" And you're making those calls as that money comes in, versus doing it in advance.
But I'm just saying, if it's 200,000 that we're going to get and we don't plan it, then there's $200,000 worth of stuff that will not be done. Can't spend money if we ain't got it.
But it will be done when we receive it. So once again, it goes back to the same point. Do you want to try and get projects done and not get the money and spend the $200,000 and then the next year after that get the 200,000? Because then you're going to be in the position where you spent the 200,000, you didn't get what you expected, and then the next year you're going to budget that 200,000 and spend it on something else. So I can see both sides of that coin coming through operationally.
You guys don't think that's fine?
This will be to be continued.
Huh?
And just let him go through it.
And then the last item on here on administration that I wanted to touch on was the equipment. Once again, we do have a capital section that we'll talk about in more detail. We have some firebox and server upgrades that we're proposing this year based on the 5-year capital plan that we presented to the board for $32,000 in this line item.
Yeah, and that's for the district specifically.
That's for the district
Because
specific.
last year we did golf
The golf,
operations.
correct.
Okay.
We postponed the district. This year
Right.
we're going back and getting everything in line
Thank you.
as far as server. Page 21, community services, overall 6% decrease. Wanted to touch on a few things. We did have a new community service director that we're budgeting for that position. Like you said, you guys all met Ariel today. We've marketed, one thing I want to touch on is the $50,000 in marketing. We've kind of hedged that $50,000 for the Delosier proposal. We don't know what that number is yet. So that number will change based off Delosier's proposal and what the board would like to proceed with as far as marketing. Once again, workers' comp kind of sticks out, but we know why that's.
And you're reducing advertising?
Advertising went down slightly. Last year, the 69.5 included, there was some money allocated potentially for Buffalo and then the Delosier group. So we had a couple things in that line item that aren't. So it's really not a decrease. We had some things that didn't pan out last year, and we're budgeting the $50,000 for marketing.
Okay, so under the advertising aspect of it, the billboard design and install, are we getting a billboard?
Hey, what is
The one that was we received money for when they tore it down on us?
Right. We've talked about that internally. We're not moving forward with that just yet. So I don't know. I don't know what we're doing.
So I guess my question would be then, where is that 9,000 or 10,000 that we received, and why are we budgeting billboard design and install if we're not going to do it?
We have it budgeted, but by the next meeting, I guess we'll need to talk about that because, I mean, having a billboard, we don't really know whether or not it works. There's no way to, track, whether or not people are looking at our advertisements as they come into the county. The cost, the only quote that we were able to receive after the hurricane was from a local Lake Placid construction company for $19,900. So that would be double of what we received from FDOT, which was only $10,500. So we called. I have a list of about 10 local companies, and we also called Polk County to find out how many companies pulled a permit to build wooden billboards in Polk County. There was only 2. We reached out to them. They were not willing to give us a quote. And so we're kind of at a standstill on that.
Well,
I mean,
thank you for that.
Yeah,
But I don't understand why we have it in here then if we're not planning on doing it. Why is it in the budget?
Have any thoughts on that? We don't, yeah.
I understand what you're saying. I just don't understand if the thought process right now is it's up in the air and we're not going to potentially build a board, then maybe we shouldn't have that extra money in there.
I didn't give it enough thought before the budget process, but to pay double for a wooden billboard from what the monies we received, I just don't know if there's any true payback on that billboard at all, in addition to changing out all the vinyl advertisements. There's a cost in that, which is this right here, so we're going to get that adjusted.
Can we make your life easier by just saying we don't want it?
I'm fine with that. Just to spend double was not what I intended.
I don't know that I'm prepared to say we shouldn't be looking at advertising.
For $19,000? Okay.
This is our first.
We can vote on it later, I guess. We can delay it, throw it down the road, but.
The construction of the billboard is not in the budget.
So we're taking it out?
So we should be taking the whole thing out. That 8,000 should come out of there then. You have no billboard, you can't put it on something that isn't there.
Also, my thought process was to wait a little bit and let some of these contractors, get through whatever they needed to, because, you know, what happens with supply and demand, of course, our costs double. But having the billboard was very, I mean, it was very informative for those driving into the county, but again, is that something we really need? The billboard we acquired because we found out the billboard that was constructed there about 20 years ago was on our property. So we ended up acquiring it with a little bit of legal costs, and so that's how we got it in the first
So the
place.
$10,500 that we reimbursed for it sits somewhere in the general fund?
Yes, it does. It was
Okay.
pre-hurricane.
Okay, so that sits
Yes.
in the general fund. But we don't know what we're going to do. We don't have a line item in here to build a billboard. So,
We'll go ahead and remove it. We'll remove this line item for billboard install and design.
Okay.
We'll make that change.
We're taking that out?
Yes,
Yes.
taking that out. So it's going to be a flat 50,000 in advertising for this upcoming year, just based off first
We
proposal.
only have $7.5 million more to go.
And that, the
1.7 million.
marketing last year was, I think that was all Buffalo, wasn't it?
We had
Last
some
year?
Buffalo in there, that's why I'm saying, it looks like a decrease, but it's really
I thought we
Buffalo.
had said no on that. Is
Right.
this something different, I hope?
Yeah, this is
the
for
50
what
here?
Delozer is going to present. So
Okay.
he's going to come back with some sort of marketing effort that he recommends for the district, and then at that time, we can decide whether we want to spend
Whether we
50
want
or
to.
25. What his recommendation is, we're just hedging for 50 because we don't know what that recommendation is going to be at
Okay.
this point.
yeah, and this is new allocation for the second phase of
Correct.
his project. The
Exactly.
first phase, he's, whatever, 35,000 or something.
Yes, sir.
Okay.
I hate to bring this up, did we put the signage for the front, about the golf community? Is that in here somewhere?
Signage.
Come on,
Yeah, the
let-
You mean
lettering,
lettering?
18-hole championship,
It's in repairs.
36 holes,
It's in maintenance,
huh?
grounds maintenance. If it's an item that we end up doing, it's in our maintenance costs. It's below 5,000, it's not
So
a
it's in here,
capital
so-
item.
Okay, so we're covered on that?
I mean, we're covered, yes, we have some maintenance money that
If we decide
we decide to do it.
If we decide to do it, it's covered under maintenance.
We haven't decided.
That's fine. If we decide to do it,
It would
I
be
thought we
covered
already
there.
decided.
We have budget for that, yes.
huh?
Any other questions on page 21?
Thank you.
Yes, I have,
Okay.
on the Veterans Tournament, I think we ought to talk about it.
Okay. I'm going to let Danny talk about it.
I know last year, I don't know if Dan and Ray were on that, but I know when I was president, I think Dan was, because I put Dan on the committee to work with Jim on tournaments at a whole, period. And we didn't vote, but we come to a consensus that the board could change it, but the rates anybody pays, which would be anything, would be half of what our resident membership is.
At a minimum.
At the minimum, that's the minimum, I think, if I'm correct. And now, I mean, I'm just irritated that this shows back up, that it's somehow getting around it. And I hate to talk about it because it's something, but we need to talk about it. I mean, it's not, you're proposing to give $2,500 to the Veterans Committee because we're going to charge them? I mean, is that kind of like a payback or what? I mean,
The proposal for the committee, which we haven't proposed yet to the committee, but the rounds of golf that we're looking at would be a $28 fee, which is $5 discounted from the $33 current resident fee for the month of November. Okay, so that's not half, that's more than half. If the board were to approve the $2,500, the requirement would be for the $2,500 to be given back to the golf club to offset any costs associated with the golf tournament. So,
I mean, that would be that's what you would ask us to do, instead of, to pay out of our money pay Billy Casper back. Is that correct?
It would be from the district to Billy Casper to offset any golf tournament costs or food costs associated with a particular tournament.
And I know we talked yesterday, but to me, this is another pergola thing that we put up with last year. I don't understand, without any discussion, that it gets in the budget, because we should be voting to put it in and not to take it out. And the stuff that gets in the budget, and we got to vote to take it out, I mean, maybe that's the way it's done, but it just seems, to me, it shouldn't have got in there unless we decided to put it in. And I know Omar told me specifically last year when I was president that you guys would get a consensus before stuff like this happened.
Right.
And guess what? I had a meeting with the committee, and it shows up in the budget.
Right. I think last year we had the issue where a supervisor requested something and we put something in. So anytime there's a new request from a supervisor, yes, that is the case.
But we ought to change that rule.
But this is a management decision that was made. So for example, if Mike wants to install, I don't know, a new shed, and he puts it in the budget, he's telling you, hey, I need a new shed, we're not going to go to the board and ask for a consensus on adding a new shed to the budget. So I think there's a difference between what happened last year and what's
Well,
happening
and
this
there's a difference in Mike wanting a shed and putting this in there. I mean, there is, there really is.
But Mike's going to come in here and ask for a new tractor and a new mower. He's not going to go and ask for a consensus for the board before he puts it in the budget.
No, and
And that's kind of the same thing, as we put something in there, management has made a call to put something in there that we felt was appropriate, and then if you guys disagree, you guys have all the authority to remove it. But last year's incident was a supervisor making a request, and we put that in the budget without a consensus.
Without, I don't want you to mention the name. Is that supervisor on this board now that recommended putting it in the budget?
Well, that was last year. No, he's not on the board.
Okay.
Like I said, that was a situation that
was last year's?
Yes, that was last year.
Okay, I just want to make sure that because here again, you never know.
So we don't want to add anything to the budget.
So you put it in based on somebody's request for last year?
Correct.
Okay.
Yes.
that might be the way you guys do it, but I don't agree with that. I mean, and I guess I'll be complaining about it next summer too. And when are we going to vote on taking this in or out?
You guys can talk about it anytime. This is a workshop. You can talk about it now. If you want to put it up for a vote and take it out of consensus, you can do that now.
Who do we write the check to?
The check would be written to Sun and Lake Golf Club. That would be my recommendation.
It doesn't go to the veterans?
Well, it would be to offset any cost. I mean, it could go to either or. I mean, it could go back to the golf club or it could go back to the veterans.
Oh, 'cause I was
with the understanding that the money would be
I was under the
used towards.
impression that it was going to go directly to Kurt or whoever's in charge of the veterans, Howard, whoever that is.
As long as the money
Because it's money
circled.
that they would have gotten that they're not going to get because of the way we're going to charge.
True, but there's still costs that they would have to pay for at the club for the tournament. So it could go against to offset those costs, or it could go directly, to the veterans, as long as those costs circle back. I mean, they're going to still have payment or invoice for food, is that correct? Plus golf. So there's still costs associated with the tournament.
Well, it's a difference to me whether it goes to Casper or to the veterans guys. I mean, that's a big difference.
Ray, what she's saying is that Billy Casper won't be paying for this, we will. And if we decide to give this $2,500 to the Veterans Committee, we have to reimburse Billy Casper. Something like that.
No. I hope not. I hope that's not what I'm hearing.
We don't have to. The idea was to help offset any costs associated with the golf
I mean,
tournament.
theoretically, they got 5,000 numbers. They got $5,000 last year the way it was run. Now the club, Casper wants to change it, so the veterans guys are only going to get $2,500. So they're asking for another $2,500, so they're not worse off than they were last year. Is that just using numbers right? That's how I kind of understood it.
I don't know if it's worse off or better off.
Well, they're breaking even. Which last year they
I
got
would
5,000.
think that would be the goal.
And they want to see that they get
Yes.
5,000
I would
this year.
think that would be the goal. Based on their letter, that would be the goal.
Well,
That's what they want to do, but this board is responsible to the taxpayers of Sun and Lake, and not to the Veterans Committee. So, you know, the question is moot whether or not they break even or not. The question is whether we want to take $2,500 of the taxpayers at Sun and Lake's money and give it to the Veterans Committee. That's really the decision. And however you do it, by reducing this or increasing that, is immaterial. So the question is, do you really want to take $2,500 of the taxpayers' money and give it to the Veterans Committee or not? Or more or less? Do you want to make a contribution to the Veterans Committee that's running this tournament that helps the veterans in Highlands County? That's the question. The rest of it's semantics.
Why are we giving Florida Hospital $5,000?
Same issue. Same issue. It's a contribution.
It's a contribution.
Do you want to make a contribution or don't you? Do you get any benefit from it?
We're talking the veterans versus somebody who lives in Sun and Lake, or a couple? Okay.
Well, I know part of it, the hospital, we got one or two teams of free golf. We got invited to a banquet. We went to see a show, and that was all part of that $5,000. So.
The issue there is that it's a benefit to Sun and Lake to have the hospital sitting on the front entrance. Plus, they pay us a bunch of money in assessments.
And there's no requirement for a contribution to Florida Hospital. That's been in place for a long time. Since I've been here, I believe we've contributed back to their cause, which is the Florida Hospital Foundation.
Right.
Yeah, I mean, there's a lot of good PR that comes out of that. Whether people feel that 5,000 is too much, you pull a plug on that. In my humble opinion, you pull a plug on that, and you're just stirring up a hornet's nest that doesn't need to be stirred up. I mean,
no, I'm not saying that the 5,000 is wrong. I'm just saying if you can justify the 5,000, 2,500 for veterans. There's a lot of veterans here that live in Sun and Lake. They may not use the services, but I bet they appreciate the fact that we're doing this. I just think that, 25, I mean, we spend a lot of money on a lot of dumb things, but to spend it on the veterans and to help them out, I don't see that as being out of line.
Can I say something? I'm on the committee, right? We also filled the golf course that day, and we also filled this room with over 250 golfers. We also bring a lot, the money that's basically is being given is actually being spent here. Just so you know that, okay? I mean, I understand what you're saying, should we do it, should we not do it, right? All the money stays here in Sun and Lake, here in Highlands County. We also filled this golf course, both golf courses that day. And last year, the way we ran it, we let the veterans play free, and that's kind of what we're trying to, any veteran, we're trying to help their cost. I had people come up to me and say to me, they didn't even realize that this restaurant was here until this tournament. So, they are getting something back too. So, thank you.
I think it's a worthy cause. I've been involved with it in the past. I try to step back from it a little bit because of my position here. And you can build a case a lot of different ways on this. The courses did fill up. They were free. Everybody played for free last year. That was a big revenue hit for the district or for the golf operations. I don't think we can take, fiscally responsible person isn't going to give away 250 green fees. It just doesn't make good sense. Now, out of that 250 green fees, or 240 players that we had, probably some percentage, it would be a wild guess, but I would say probably 100 to 120 of them are actually members of this club as well. So,
Mark, I think it was about 45 to 50 veterans that showed up that weren't members. The rest were members or paid. So, we're talking 50.
Well, if that's the case, then I've been fed misinformation.
Yeah, I
from the
mean,
golf
I know it wasn't
operations.
the numbers you're talking, because it's, I would say over 80% of people that play in this, 75 to 80, were Sun and Lake residents. And I think almost everybody on that board even played.
No, I was
Don't-
guessing when I said I was being conservative.
Yeah.
Okay, I was being conservative when I said how many Sun and Lake people,
Yeah.
because I know there's a good percentage of them. And, I think this is something that we gotta, in my opinion, would have to discuss it a little further to try to understand it. But
Yeah, I
it's
think
up
the
to
other-
the wishes of the board as to what they want to do.
I think the other thing that would help, when I was president of the MDA, I used to get a monthly financial statement from Kurt. So I know what was in the fund when I left that position. I haven't seen one since. I've asked what balances were. I get answers, but they're off-the-cuff answers. I'd like to know what the condition of that fund is with the financial statement. I think it ought to be published and posted out here like it used to be.
Joe-
And that doesn't happen anymore.
Joe, I thought it was, I don't know. I mean, I can't answer that, but I thought it's posted out here in the members, I don't know why it's not, but I'll talk to Kurt.
Well,
I understand.
I mean, we posted it, the MGA posted it before because Kurt sent it to us when we were
Right.
the sponsoring organization or whatever it was we were. I've not seen a financial statement since then, but to be honest, I haven't gone out there and checked the bulletin board.
Yeah, I think it is on there, but I'm not,
And if it's being,
I don't know
if it's
for
being
sure.
published,
I
that's
mean, I
fine.
thought it was
Shame on me
posted.
for not looking.
it's not,
It's
no.
not on the board.
Okay, I don't know.
I don't think it is either.
No.
But we'll get it there if that's the case.
And just so everybody knows that's in the audience, we really didn't want this out because we didn't want other organizations to know about this, because we're not in the business of giving stuff away. At least I didn't think we were. And I'm a veteran. I served during the Vietnam War in the Navy, but I'm not in favor of I'm not in favor of $2,500, but I would certainly be up to giving something, just so, and I don't think we have to make the decision now, but I just would like to, $2,500 is a lot of money. The Veterans Fund, when I was treasurer for 2 years of the MGA board, and it's a good fund, it's a good tournament, and you make money and you spend it. And it's not about how much you make. In my mind, Mike, you guys do a great job. Do a good job, make what you can, give it away, and we'll do it again next year. It's a good thing you guys do. It is. Nobody can argue with that. But why, my problem is just giving away an extra $2,500, and I don't mind giving something. And I'm a veteran, I want to know that.
Billy Casper Golf is recommending a $28 fee per player for this tournament, which is different from last year. So that proposal would increase their cost to the club versus what they had last year. And I'm not advocating for or against the cause. I know that this is, again, I know where the Billy Casper stands, and like President Camp said, it's not fiscally responsible to allow free golf for, that particular day.
What did they charge last year? Nothing?
It's free.
Free.
Free for everybody?
It was free.
No, it was free to veterans.
Free to veterans, yeah.
Okay, it wasn't free to everybody. It was
And
only
everybody
free to
else
veterans.
paid?
Everybody else paid, or were members here at the club.
Okay, so they get...
And I don't know the numbers exactly what
Did
they
they
were.
get a discounted price, or they paid regular price? Anybody know?
I don't know what they did. I don't know who paid what, I know people come in and pay, that's all I know.
So this year, this year they're going to charge 28, and they'll have an increase in revenue.
The committee charged for the players. I think what Mike is, that's what you're talking about, Mike.
Yeah.
He charged, but I'm talking about the charge for
Yeah.
what Billy Casper charged for golf and for the club, and it was free. That's what Mark is saying.
And who paid for the food?
The committee?
The committee paid.
Okay.
Committee paid.
No.
No, no?
No. You paid for your own food.
With your
And I
entry
think it was
fee.
$15.
That's part of your entry fee.
Right, exactly.
Yeah.
Yeah.
Exactly. That was part of your
So
entry.
the members who didn't pay anything because they're members,
No.
did they pay?
If you were a veteran,
Oh, if you were a veteran.
if you were a veteran, you would come in and pay the $15
Okay.
for the food, for the meal.
And the members paid $15.
Correct, Joe.
Member
Yes.
pays $15 for food too?
Yeah.
Yes. Yeah.
Well, I think we ought to decide it now. I don't want.
You know, I think there's a lot of confusion on this. I don't think we're dealing with a lot of the facts, and if you want to make a decision on it, then that's fine, but, you know, without having all the facts in front of you,
It's just $2,500.
we're talking about what they paid, what they didn't pay, who was free, who wasn't free, you know. Like I said, I had many discussions. I'm a veteran, by the way, too, so many discussions with golf operations on this, and I don't have the notes right in front of me, but there is clearly some miscommunication going amongst this board, and I don't know if it's me, but last year we never charged anybody green fees. That was last year. It's over. It's done with.
That is correct.
Okay?
That's
We
correct.
did not, there was no way they could vet, you know, or no pun intended, there was no way that they could determine who was a veteran and who wasn't, because you had people come in and signing up that day, okay, and they signed up for it. And, you know,
That's a sign.
I'll leave this up to the board as to how they would like to proceed with this, but I think we're dealing with not as much information as we need. Now, if they feel they don't want to do it, or they want to do it, then, you know, I'll listen to what they have to say, but...
Is there any additional information I can research for you and bring that back as far as,
Well, if we're going to beat around every $2,500 item, we're going to be here for 6 years. I mean, I think we should authorize management to take the proper position and do whatever she thinks is responsible.
Well, I thought we
I'm good with
had. See, and that's what, I thought last
You put it
year,
in here.
we told Billy Casper and you what we wanted. And that's, and then again, I don't know if it's a committee or what, but we seem to make decisions here, and they come back. I mean,
Well,
maybe
what
you
we
can check the
actually-
minutes,
What
but
we actually said is exactly what I just said. We authorize management to make a contribution if they thought that was, so it's here, that's, I'm assuming what you're recommending, or not? I mean, we're not the Board of Management of Sun and Lake, we're the Board of Supervisors, so the management's supposed to make the decisions, and we're supposed to either agree or disagree, but if we're going to get into every minutia, they can never get anything done, but same token, they can never make a mistake because we never let them do anything. Sooner or later, we got to stop Mickey Mousing and decide, you guys are getting paid to do it, do it.
I agree with you, Dan, wholeheartedly, but it's the nickels and dimes and the quarters that add up. You know, $2,500, to argue over $2,500 for 15 minutes when we've already covered three-quarters of the presentation in less time than that is a little bit crazy. So, then make a motion to either say to management to make the decision, you have the authority to do it, do it. If you feel that you want to leave it in there,
Good with it.
we'll leave that decision up to you.
but I think you should follow the guidelines that we gave you last year.
understood?
Are we not, I'm sorry, are we not deciding? What do we decide?
I think we're leaving it up to management based on what, you know, I agree with what Dan
Make a
said.
decision here.
Well, she will be making the decision.
Well, why, it's in front of us, we've been talking about it for 20 minutes, why can't we decide? I don't understand this. I mean, why are we talking about it if we're going to tell them to make the decision?
Good question.
Because the decision was made that we made last year, Ray,
We don't
and
like
they didn't follow it.
Well, I'll tell you what I'll
If
do.
we don't like it,
Here's my,
tell them no.
okay, we'll take a consensus. I say leave it in.
I say leave it in.
I agree.
Out.
It's not a vote, it's just a consensus, right? You're saying no?
In.
So 3 in,
I prefer to leave it out.
3 in, 2 out. So it stays in.
Consensus is 3 and 2 out,
So it stays in at the $2,500.
correct?
Okay.
If it stays in for the time being, you guys want to talk about it next time.
Please don't.
Anything else on page 21?
The only thing is, this was a quick line item.
Yeah.
Every year we put banners up. Is that true, or
Yes, the banners change out twice a year.
twice a year? So-
That's on the Center Lake Boulevard.
Okay, so, and the life expectancy of those banners is what?
I think 2 to 3 years. I can confirm that, but meaning we can use the same banners for a couple years, but with them being in the sun and the UV damage,
Okay.
we change them out. So,
I think we
there's
actually
costs
replace
associated
those
with that.
quarterly. Which each season, I think we change them. So
Yeah, we change them out each season, but I think we can reuse the same. We don't have to
Purchase new
reprint
ones?
or have new ones printed. I think we can reuse them.
It seems every year we're buying new banners, that's all I'm saying. And so if it's on a cycle, a
There's a
3-year
cycle
cycle or
on it. I don't
4-year
have it in front
cycle,
of
I'm
me.
just trying to understand that.
There is a
we'll
cycle.
assess that now. Like I said, Ariel's going to take over that department now, and
Yeah.
we'll get a better handle on what's actually being done and if we can recycle more. And there may be a change to that line item.
See, Ariel, that's your first line item.
First half.
Thank you.
Page 22, recreation. I want to touch on the 26% increase in the salaries. So we haven't made any changes to full-time positions or part-time positions. The increase is coming from the seasonal line item. Last year, we budgeted $9,000 for summer camp, which really doesn't get you as far as what was actually happening. Last year, we spent about $18,000 in salaries for camp counselors and staff to host the summer camp. And a lot of the staff was, high schoolers and volunteers, and it was kind of all over the place. This year, we took a proactive approach. We hired a camp director and an assistant camp director for a total of 7 directors it ranges from $10 to $12 an hour for those weeks. So that's where you're getting that $33,000 figure. So summer camp cost us $33 plus the $3,500 that you see down in line item 4810.
That's a substantial increase.
Yes.
How much money we lose on summer camp?
Summer camp, I think we did the financials last year, and it's pretty much a break-even service that we provide. And a lot of it, we've checked how much Sun and Lake residents participate in that summer camp, and I want to say it was close to like a 75% involvement from the community in summer camp.
Well, could you find that and give us
wanna give us
exactly
the-
what it cost?
Summer camp figures.
And that break even is,
That's what the
would
3,500
would be with the 3,500, and you're factoring in this large increase
That
in
was
salaries, or, you're
break
going
even
from
was last year.
9,000 to 33,880.
Right.
Okay? So there's a difference there.
Correct.
Of roughly $23,000, $24,000.
So last year we only had 6 positions. This year we've added an extra position for summer camp. But at the same token, we've expanded how many campers can be involved. So we feel it's going to offset that extra position. So last year, once again, it was set at 9,000 budget. We spent 18 plus the 3, so 21. It broke even at the 21,000 last year. This year, we feel it's going to break even at the 33 based on the additional campers that are involved in summer camp.
Okay.
So, once again, we gave you we'll pull back the last year summer camp figures, and then this year we'll reassess summer camp so we can tell you whether it's breaking even, making money, or losing money, and then we can have this conversation next year as to whether we want to reduce staff or keep summer camp or reduce cost, add campers. We'll make that assessment as things progress this year again.
The landscaping maintenance,
Landscape maintenance did go up. I believe it went up $3,500. Marie and her staff in the pool have been making some improvements to the landscaping over at the community center and around the pool complex. There's rocks that are missing. The lava rocks are really out of shape. Some of the palm trees look dead, so we've got an assessment on those. Around the community center, some of those hedges haven't been changed for a long time. Some of the mulch in that parking area. So we just want to enhance the visual appearance of the community center and some of that recreational complex over there. So we've allocated an additional $3,500 in that line item.
thank you.
That's not including anything for landscaping the new dog park.
Correct. No, any landscaping that comes from that will come out of the buildings and grounds landscaping
I'm
department.
assuming we're going to get that done.
Yeah, so that's in the buildings and grounds.
What is a merit increase?
Merit increase is the merit increase that we offer the employees on an annual basis based off their performance evaluation. So it's an annual
That's
increase.
a raise?
That's a raise, correct.
So, and how much, if we, do we know how much we put in the fund for increases in salaries?
This year, the budget, total budget for all funds is $37,000 in merit increases.
37,000?
And the percentage is what?
There, you get to up to a 3%
3%
contribution
increase.
based off their evaluation, so they can only get 1, 2, or 3,
Okay.
depending on their score. But the $37,000 includes general fund and utility, so all the
So
wastewater.
all 42?
That's all salaries across the board,
Is
yes.
37,000,
Correct. That includes,
and that's 3%.
correct.
And that is
Security guards,
Do we do that
everything.
all at the same time?
We do that every year.
I mean, is it all
Pretty
an
much.
annual, one time? You do it at the same time every year?
Yeah, it's always in October, once the budget gets.
How many years in a row have we done, give 3% raises?
I'd have to go back and look for sure. As far as I know,
8, 9, sound familiar? 10?
oh, yeah, I wouldn't disagree with that.
What, have we done 3%?
And what do we actually do? We budget 3%. What do we actually do?
It depends. And, once again, every employee has their own separate evaluations.
I understand.
So each department could be different. I'd have to pull those figures for you, but just from my personal recollection, I know 2 of my employees have gotten 2% last year, and 2 of them got 3%. So each department, based off their performance, does their own evaluation on each. So typically, it's 2 to 3%.
And what happens with the excess money?
Another thing that I want to add before I answer that question is, a good example is the customer service utility supervisor who we just hired in May. They would only be eligible for a 1% increase because of the time that they came in to employment with the district. They wouldn't get the full 3% because they weren't here all year. They would only get a 1% contribution if they got a perfect score. So we do try to hedge that on that side based off how long they're here. What was your question again?
What, I mean, if we don't use all the money, where does it go?
It just stays in the general fund for expenses. It doesn't get used. You'll see that actual come in less than what we budgeted.
So we don't move that out to another account or anything like that?
No, so for example, if you look at the estimated actual, we're estimating 95,000, we budgeted 100, so that $5,000 difference is either, a difference in someone not coming to work or, being laid off or not getting the full merit increase. There's just a savings in that line item.
The merit increases that you do, are those on full-time employees only?
Those are on every employee.
Every employee, part-timers as well?
Correct.
Supervisors, I wanted to mention that Highlands County has now adopted this same merit system in their 2017 employee manual update. Is that correct? Was it 17, early
That's correct.
17?
Yes.
So their employees, every employee for Highlands County receives evaluations and will receive a merit increase based on their evaluation. So this is something that the county, I know this was a big project because they had talked about it for many years, but finally had implemented the change.
The county's going to have the money to give that? I mean, that sounds...
Apparently they are, but
Okay.
that's up to them. I don't know. I just wanted to let you know that was a change that the county had made recently.
I really do believe in rewarding your employees for good work, okay? But at the same token, there's always a little caveat to it. These blanket straight across the board types of things, they can certainly bog down a budget. There can be a high level of expense there. Some people do get 2%, some get 3%. In private industry, when I was in it, we were allocated X amount of dollars, and somebody got 0, and somebody might have got 7. I mean, we just had a pool of money. It doesn't sound like that's quite the way it works in the operations here. You pretty much say, okay, 1%, 2%, 3%, and that's it. So if somebody does an outstanding job, does over and above, he or she is still going to get maxed out at 3% unless they change their step rating within their position. Is that correct?
That's correct.
Okay. It's the way it is. It's the way it is.
Doesn't have to. If we're not happy with it, we should change it.
I'm okay with it.
I'm just
We
not
hired,
happy.
we had last year some staff, and we haven't actually gotten into that part, the mechanic that we no longer have, that, was he type 1 mechanic, lead mechanic?
Yes,
Are we replacing that position
yes.
with a lead mechanic?
With a head mechanic, yeah.
And do we have
Yeah,
candidates for that person, or for that position?
It's already been offered.
Yeah, it's already been offered. It was an ex-employee of Billy Casper. His references, everybody who I called, said, get him. So he'll be starting after July 1st.
And he resides in Sebring?
Lake Okeechobee.
Like Okeechobee?
Yeah.
Okay.
Yeah.
So he'll be commuting from Lake Okeechobee.
Well, I have another employee that works security from the same area.
Okay.
And they're here every day.
What's the racquetball 3,500?
The special event. So the district hosts a tournament every year, a racquetball tournament. Puts it on, schedules it, provides tents and all that.
One tournament?
I think it's only one tournament.
Is that a net number? I mean, I assume there's an entry fee and...
Yeah, this is just the expenses. The 35 is what we'll spend on
Okay,
expenses only.
okay.
But
So
we'll
you've got a
probably take
revenue
in.
side, you've got a revenue
Yes,
side
sir.
to that, okay.
Correct.
Big change in the equipment, too. Can you share that with me? Bottom line item.
6,400. So yeah,
10,000 versus
41.5. So
41.5.
the 41.5 last year included 20,000 for the dog park, 15,000 in a miscellaneous that was put in the budget, and then 6,500 for bocce ball and
okay.
the pool furniture. So this year we've taken out the 15,000 miscellaneous, and we've taken out the dog park. So 10,000 is the only request to update some of the gym equipment that's going in there.
Okay.
So that's why there's such a significant decrease in that line item.
Thank you.
Okay. 23, of course, finance has no major changes, all straightforward. Workers' comp, health insurance, once again, sticks out. Travel and training, we did increase that a little bit more as we're sending some of our accountants and administrative staff to some of the conferences like FGFOA. Real estate taxes, with the exemption that we passed with the board, our taxes have really gone down from $26,000 to $15,000 this year. So we made a significant decrease there. Overall increase 1% in that department. Any questions?
Nope.
24, significant.
Go back to the real estate taxes.
Go ahead.
15,000 is what we're estimating this year.
Correct.
So you're really planning an increase.
We are. The reason why I budget at 15 is we've been getting a lot of requests from property owners who are abandoning their lots or wanting to deed them back. Depending on whether they're valuable or not, the district will incur those county taxes once it becomes in our name. So I've hedged a little bit for that. Every year we go through, the property tax appraiser sends us a listing of all the lots, and we go through line item by line item and choose which ones we want to pay for and which ones we do not.
So you think it's going to be a 33% increase?
It may not. Once again, this was the first year that we've had that significant decrease. So as we get, some trends, that may go down again. So we hope it doesn't go up that high, but we've hedged it a little bit higher. So yes.
And also, we have the fire assessment on the vacant lots as well that we pay. We pay taxes, but the fire assessment that will be assessed against as a non-ad valorem tax to the residents of Sun and Lake, it affects the district.
At the same
That's,
rate?
right now, currently, it's $5 per vacant lot. I think it's going to be 25 or 35. Do you know, Omar?
Yeah, no, I can't recall off the top of my head.
Per vacant lot. So that's going to increase
Substantially
our
less than what we're going to pay for homes.
homes.
That's 100.
Homes are $95.
95 to 104, I think, is phase one.
Okay, that's
So
fine.
the $25 that's currently on your tax bill will go up to that amount, anywhere between 94 and 105. I don't think they've set the rate yet.
That's fine.
Page 24, code enforcement, 60% decrease overall. Biggest change in this department is we removed, there was a 50-50 allocation of the part-time full-time security supervisor who was doing both. That position was vacant for a few months. We've rehired it as just a security supervisor, so he's no longer in this department, which causes the salary and wages to go down, FICA, retirement, health insurance. All those line items go down. Every other adjustment basically is getting it back in line to either estimated actuals or better in line with budget. Page 25, security. So the 16% or 26% decrease that you saw in code enforcement, now you see the increase in this department because it's getting the full 100% allocation for that new security supervisor. Part-time security officers, we've budgeted the same, no increases there. Retirement contributions, once again, goes up because now you're getting his full salary at the 5% match if he uses all of it. Life and health insurance, he does get benefits for that new position, so we budgeted that full amount there. And the last thing that really sticks out is the equipment line item. Security is proposing as a capital purchase a new Gator, 4x5x4 Gator for their fleet.
Michael,
Yes.
you have your new security supervisor now.
Yes.
How are we going to get the word out to the people that they don't have to call you all hours of the night, every day? Because it seems you're the go-to person, which is wonderful, but how are you going to get that message out?
Well, I'm trying to get it out now. Well, first of all those, anybody that works security will call him first. In the past, they would always call me. So also, I got him visiting a lot. I mean, the calls that I get, I give him the numbers to call him back. So it's starting to work.
Okay.
And he's doing a good job.
I'm sure.
Yeah.
But I mean, the names, the first person that comes to mind is Mike Hurley, and you're running a large operation. You don't need to be bogged down with some of these little things.
They're going to call you anyway.
They're going to. Well, the other thing is everybody's got my cell phone.
We're going to change the cell phone number. That's the fix.
Change your cell phone number.
Yeah, everybody, and Mark, actually, as part of the job, and I understand it. I mean, if I need Bob, I call him. He calls me right back.
I don't disagree. It's part of the job, but you need to offload some of that work.
Believe me, I'm trying.
That's why you hired somebody to do this. Why hire somebody and pay them if they're not going to be doing it? Okay, that's all I'm saying.
I think all you need to do is frequently and very visibly post the 24-hour number that you have to call security.
Everybody has that number, Joe.
Everybody doesn't, Mike, or they wouldn't be calling you. I mean, there are people. I'll guarantee you everybody doesn't have that number. We ought to see that in every newsletter. 24-hour security number, 863, whatever the hell it is.
Well, yeah, that's probably a good point. But you call me too, Joe.
I do too. Yeah, but we don't.
You got it.
I'm trying to catch you working.
Oh, okay.
In our next newsletter, I'd like to post, a picture of Bob and introduce him along with our other new employees, but emphasize, the phone number, what Bob does to the community. We can do it that way. We'd like to.
Bob doesn't need every call either. That 24-hour number should be the primary number that people put in their cell phones.
Yeah.
So,
good point.
I'm trying to help you out.
And I appreciate that from both of you.
I didn't say a word.
No, I know. You and Mike.
Page 26, we jump over to buildings and grounds maintenance. A few of the line items that really stick out. Repairs and maintenance, last year we budgeted $55,000. If you look at the actuals, we hit $58,000 in 16-17. This year we're estimating a lot more. Mike and his buildings and grounds department is doing a lot more maintenance and repairs. So they've increased that by $20,000. Landscaping, once again, we've taken into consideration the dog park landscaping. Mike really wants to try and address some of the main, right-of-ways coming down Stone Lake Boulevard and Orduna. We really haven't spruced up those common areas as much as we probably could. So we're going to try and address those for appearance purposes. So he's increased that budget. I'm trying to think what else we might have finished. Waste removal. We've added a new, since the new maintenance department or building has been up, we used to all share a dumpster for all the waste. Now Mike's moved his dumpster away at one of those sewer plants and he's left one there for golf. So our waste has gone up as there's not an area for them just to dump it and kind of forget about it. We're keeping up with it and dumping it accordingly and appropriate. So that's made the cost go up. And I think we went from one dumpster to two for that department. So that's.
And this is the yard waste, right? yard waste, debris, like limbs and stuff like that.
Yard
If you
waste,
remember,
I think it's
the
what
golf
you guys
was
see.
dumping it over there by the...
Right, the golf operations did it by the
And
first
that-
green, and it
And
just
that
piled up.
cost us an arm and a leg to get
Correct.
removed.
Right.
So now we're
Ton of
keeping
money.
up with it on a monthly or weekly basis, so.
Thank you.
What, break down the waste removal again, the 15,000?
So let's look at that line item, going from left to right. The actual for 16-17 was 12,200.
No, but what does it do? What is it?
Oh, that's all the-
Specifically?
So
Because we have waste removal everywhere in this.
Right, exactly. Well, there's actually 3 dumpsters.
it's anytime,
Okay.
anywhere you got a dumpster. So recreation has a dumpster.
Right.
That's out by the community center. Mike has 2 dumpsters. The utility departments have dumpsters. So anywhere you see a dumpster or any waste removal service, that's where you're going to see that line item come
Okay,
into
that's
play.
what it pertains to.
And anything that we pick up on the side of the road, couches or whatever, and we do it,
Okay.
once or twice a week. People drive in, and of course, there's roads in the back where there's nobody there.
Yeah.
We try to catch them, but it's pretty
And
tough.
the landscaping, the 25,000 for landscaping is for what areas?
We want to spruce up the main drag, our building over here.
What building? You mean across the
About-
street, the district office?
Yeah.
What are you going to spruce up there? What are you going to do?
Well, we got plants and stuff that we want to plant. We do Christmas plantings there also. We've got 2 signs. We got signs up front. We got, the 2 signs up front that we want to do work on. We also have to maintain the irrigation, the pumps and stuff like that, which we use that money, for the maintenance.
I'm having a tough time with that one.
Okay, well, if you want, I'll take you out there and,
Well, 25,000, it's a lot of money.
well, we don't spend it all usually, but
I don't know what you're going to do in the district office.
If you don't spend it all, why are you budgeting so much then?
Well, I'll
Why
try
don't
not
you
to-
put a realistic number in there?
like plantings and things like that. Palm trees, the cutting of palm trees. We bring a company in to cut, to cut the palm trees. Sometimes we can't do it. That comes out of that cost also.
One thing that we noticed if you drive down the boulevard is anytime you see, a palm tree or one of those plantings, the mulch, is some of that old style red mulch, but there's nothing that differentiates the mulch from the grass. So you start seeing that weeds creep in. So Mike, we've talked about with George about putting some sort of curbing or border around those. It'd be a one-time expense, but it'd eliminate them having to go and just weed it around it and get around it really quick for as far as maintenance, and then maybe we can fill it in with some wood chips or rocks, which is less maintenance going forward. So we don't expect this to be a recurring increase. It's going to be a one-time fix to try and make it less maintenance, and help it look visually more appealing.
That's a great credit to you guys. It's fantastic.
We're trying to pay more attention to the details, and we notice that there is some improvements that we need in our landscaping.
Can't we approach the county to say, look, we're maintaining this whole area and we're spending money and we're doing beautification. Is there any way we can get some money from them to at least help us or assist us in doing that? First of all, we're doing the labor and the work, plus we're putting the materials in there. Why can't we go to them and see if we can get some kind of funding?
Well, Mark, anytime that we ask the county to come and help us, they have helped us. Matter of fact, I'm meeting somebody today at 2:00 about the drainage. So whatever we can do in-house, we do it. But the county's been really good to us.
I'm not saying they aren't, but at the same token, that's their responsibility. They're not being good to us.
I know I've been sitting here for about 6 years, and I think I've heard this question brought up
That is an option.
6 times.
We'll reach out and we'll see, and we'll adjust this for the next budget depending on what we get from the meeting.
No, I appreciated them being good to us. I think that's wonderful. But at the same token, they have the free lunch here. We're doing all the work and we're doing all the expenses to make this. So
Before
why
I
can't we
started
just
with
ask
the
for some
district,
money?
there was a maintenance interlocal agreement that was in place between the district and the county. So I believe they paid maybe $4,000 a quarterly for maintenance of Sun Lake Boulevard. It was minimal, I could pull that out, but I mean, that was before I even started here. So many years ago, I believe there was an interlocal agreement in place. I just don't know what happened. I mean,
That's 4,000 quarterly, that's 16 grand.
but that was something that could have been in place prior to
Okay.
the last 8 years or so.
Okay. Thank you.
So, let's go back to the 25,000. I think you just picked the number out of the sky. I do. I'm sorry to say it. I think that's where it came from.
We can reduce
Well,
that.
if you
We can
look at-
reduce it.
16, 17, we spent 16,000.
We just wouldn't buy
We didn't do a lot of
past
this
cost.
I'm saying if I asked you to provide a list of what this 25,000 is going to be, I don't think you could do it. How's that? Let me put it
Well,
back.
I think I could, and if you want it, I'll do it,
I would do.
all right?
That's fine.
How's that? All right, I'll give you
I mean,
a cost of everything.
I'm not trying to pick
No,
on
no,
you.
no,
I'm
no,
just saying.
I understand that, but I'll give you a cost of everything we want to do, and I'll bet you that we're close to 25,000.
That's fine.
Okay.
In which case I would say...
And that's why we ask, because we want to, when you drive in, we want the place to look nice.
Absolutely.
As nice as we can get it.
Absolutely.
Okay? And in the past years, it's been let go a little. And I get that from everybody, So, we also spray, we also spray for ants, bugs, and everything else. That's also included in that.
Well, no, that's under, isn't that under chemicals? Because you're increasing that by 8,000. Even though it says minus 20,
No.
theoretically, it's 20,000, it's 12,000 this year and you're going to 20, so you're increasing that by 8,000. I know you can read numbers anyway. I mean, we can make the numbers look good, but in reality, that's going up 8 grand.
Right.
Now, you'll tell me that's because you're spending 25,000 to enhance the rest of it, and you need the chemicals to keep it that way. At least that's what I would have said. But I'm just giving you an example. We can't, I think sometimes we put down numbers because we got an idea.
No, so, once again, there is some method to the madness, even though you guys don't have all the information, obviously we do, but the chemicals line item is a brand new line item to that department. So, we eliminated the conservation department in the utility fund, eliminated that position. We're responsible for spraying on the course, mosquito spraying. We're estimating 12 grand this year, but we haven't even got into mosquito spraying season. So my numbers, once again, were a good estimate, but aren't going to be 100% accurate until we get through this season. So we're giving you a $20,000 hedge because there's still an unknown first-year expense that we haven't gone through that season yet on how much we're going to spend in mosquito spraying drums. Have we been spraying the golf course as much as we should? It's summertime now. That's going to increase. All these things come into play, and I can't go and just say, let's cut it all the way back down to 12 grand to save $8,000.
We also...
I know, but as Mark said before, you save 8,000 here, you save 2,000 here, and all of a sudden you're in 6 figures. I mean, you are. I mean, there's a lot of categories here that have numbers on them.
Right.
And most of them are justified.
Right.
But as I said, if
There's
you're up a couple thousand here and there, it's going
I think you could do that too, and I think you can go on the flip side too. If you look at life and health insurance, it was $33,000 another year, and we're putting $14,000. So on the same token, we're looking at some of those things where it was higher, and we're budgeting a lot lower this year. So we can go and try and nickel and dime this thing all the way down, and maybe we will save $50,000. Well, once again, we're talking $1,000, $2,000, $3,000 here and there.
If we had unlimited funds, I'd say let's approve it the way it is right now.
Right.
But I don't think we have unlimited
No.
funds. I think that when you're looking at a 13.6 budget,
Right.
you kind of have to look at some of these areas. And
Yeah.
if we can cut in them, fine.
Yeah.
If we can't, then that's fine too. I mean,
Yeah, no, for sure.
we just
There's
have to
always-
try to qualify what it is that we're
course.
trying to accomplish here.
God, that's God. Watch out. Keep watching.
Sound system.
President Camp, do you want us to change out that microphone? This one is not being used, or change out the cord? We can
So
certainly do
you know,
that.
I appreciate everything you guys have done. It's done very well.
No, there's going to be cuts. We understand that.
Yeah,
We're going to go through this process, and if we want to take $5 grand out of here, then that's what we're going through this process for,
That's why we're sitting here.
and ask those questions.
Yeah, it's fine.
This is a first cut at it.
Yeah.
The next one will go a lot quicker.
Exactly, yeah. No, for sure.
So far, we've cut $8,000.
There you go.
Thanks. Yeah, much better. Yeah, much better. Okay, moving right along.
Page 27, roads and drainage, our biggest department. No major increases or changes in salaries, FICA, retirement. So start getting into some of the changes once we get down to telephone kind of sticks out at you. Once again, they have a new maintenance building. We were in the past splitting the cost between phone services, and we didn't really have internet over there. Now they have new Comcast service, so we've taken that into consideration. So it's a $2,000 increase in that telephone line item. The next line item after that, engineering fees. For this proposed budget, we do have $350,000 in roads, paving, and $350,000 in drainage. So as we do more projects, engineering fees will, go along with those. So we've hedged a little bit more for that, about $20,000.
Yeah, those are all outlined later on as far as the roads and
Correct.
whatnot.
They're on the 5-year capital. We can
Yep.
see more detail on that. Just trying to substantiate some of the larger increases. And then operating supplies, 127% goes, kind of sticks out at you. Once again, we estimated that. You can see 25,000 in 2016-17, 30,000 estimated, and we still only budgeted 25,000. So once again, that's one of the scenarios where we've taken that in consideration. Instead of being extremely aggressive and going for the 30, we've kind of held back and went for the 25. So we have taken a look at that. Once again, I think we need to, once we get into capital, we'll talk about the roads, drainage, and the equipment. The equipment, they're requesting $150,000 in equipment. That includes a forklift, a skid steer, and a Alamo mower, I guess is what we call it.
What is the repairs and maintenance? What is that?
Repairs and maintenance is anytime the guys buy supplies, the tractor goes down, they make repairs to their equipment. Anytime we do any types of repairs and maintenance, it goes into that line item.
They run that high every year, huh?
Every year. In 16-17, we spent $82,000. This year, we're trending a little bit lower at $65,000. But we've seen an increase in buildings and grounds and addressing some of the buildings because of the hurricane damage. So it's kind of offset from one department to another.
Does that include routine maintenance, like the PMs and those kinds of things?
Yeah, it does. Yes.
Okay.
Okay, so that's all preventative
Preventative
maintenance.
maintenance, I got you. Okay.
Yep.
Yes, that does.
Yes. And that's where we take it out of June. Yeah.
So I thought don't we buy all the equipment with warranties and stuff like that?
So some of them do, like our long-term tractors and mowers. Those are under warranty. Our larger items, we bought them outright cash, and then they're out of warranty. So we send them back to the manufacturer, like Ring or Cat. Transmission goes out. Those we just incur the expenses because they're not under warranty anymore.
We just had
Some
a
of those
back-
units are, what, 8, 10 years old?
Yeah. We just had the backhoe, it cost us $30.
Now, this is a dumb question. I know the golf guys are working on a plan to buy equipment through like one resource or two resources. Is that something that you guys can tie into? Do companies make that kind of variety of product?
So for smaller equipment, Golf's proposal is going to come back for smaller equipment, mowers.
Yeah, but he's trying to get his whole package with one guy.
But he's not going to include tractors and those bigger items. He's going to continue to purchase those. He's not going to include that in there.
Right.
I believe he's looking at items that we traditionally replace every 3 to 4 years, and what he's trying to look at is a ongoing, almost a lease, that every year we'll end up turning over a piece of equipment. Instead of budgeting, let's say $200,000 one year and $300,000 the next year, what he's saying is over 4 years, we can get a package that will reduce our costs. I believe that's what he's saying.
Yeah, I'm thinking he's looking at a lease package as well as a purchase package, because he's not going to lease everything. But he's looking to do it with one person so he gets the best pricing across
For
the
one
board.
company.
My
One
question-
company, yeah, right.
My question to you is, can you
No.
guys tie in with that?
No, because we buy, say like the backhoe, it's a Volvo, okay? He's dealing with one, like Deere, one manufacturer. He's only dealing with one. They give him the whole package. Like our gators, we are different. The backhoes are different.
Yeah, but it's a company make the product, I guess is what I'm
No,
asking.
no, they don't make the product that we need, that he's dealing
Okay,
with.
so
Right, that's a good question.
that's what I was asking.
Yeah, I understand, yeah.
Okay.
Some of the things we may be able to incorporate, like the gators.
Yeah.
We're all going with deer. If he goes with deer, then maybe we can tie some of those items into that and get some better pricing as having it all under one account. But the larger items that fall into this repairs and maintenance.
I'm just saying, when he gets it, make sure you guys look at it.
Yeah.
Yeah.
And if there's a way you guys can tie in and take benefit of a price.
Right, for sure.
I would do it.
Price again, is it? Okay, price it, yeah, okay.
Any questions on the roads and drainage?
Nope.
Later.
28, going to the equipment and vehicle maintenance. Like we mentioned before, we did hire a new mechanic, so we've adjusted the salaries and the merit increase. Once again, this shows a good inclination of he's only eligible for 1%, so we budgeted the $400. So that shows.
So this mechanic 2 is the one you just hired?
Yes.
Okay.
Well, yeah, he'll be coming on
And
board after July
then-
1st, or,
Now, where is the other mechanic that was like an entry-level mechanic? Well, you had 2 over there.
no, we have one.
Oh, you only had the
Golf
one?
has one.
Golf has the other.
Oh, the golf had the
Yeah.
other one. Okay, that's right, he transferred over. That's right. Okay, thank you.
Okay.
Based off the new, offer, FICA retirement, all those benefits have gone down.
So we save money.
Workers' comp, once again, we've talked about workers' comp. Repairs and maintenance is, I think I want to touch on that. Last year, we budgeted $45,000 for repairs and maintenance in the department. We've eliminated that from this category. What we decided to do is anytime he does a repairs and maintenance, he's coding that based on the appropriate department. So, because it was a new position, we had the concern that, how are we going to get things allocated to golf that were for golf? So we created his own repairs and maintenance budget. But what we're doing now is we're coding them to golf and sending them an invoice for them to pay that expense, so it's getting coded to the golf fund. So we feel it's more consistent and better allocated that way. So that's a big decrease in that department. Overall, 39% decrease. Page 29, here's where we start balancing the budget. After all the departments and expenses, from normal operating expenses, we can only budget the $101,680, which includes the contingency for $50,000 and golf operating subsidy for $51,200. That's what we can fit if we didn't have any reserves being used. We can only allocate $101,000.
So our revenues versus our expenses, we're
Operating revenue.
51,200 short.
No.
No.
If we use only operating revenues and all the expenses that we've just gone through as is, we'd have an extra $100,000, which we would use for contingency for $50,000, and an additional $51,000 to go to the golf subsidy. Everything that you see on the next section below, the $500,000, the $357,000, and the $900,000, is coming from reserves. Once again, that 1757 ties back to the revenue on the first page of what we're using from reserve funding. So let's look at just golf operating transfer. They asked for $551,000 in their first proposed budget. If we wanted to pay for that out of operating funds, we'd have to do a couple things: increase revenues, decrease expenses throughout the general fund to accommodate that $500,000 to get it to fit from operating.
Well, we can't really talk about golf yet, can we, until we get...
Well, this is just showing you what they're asking and how it ties into the general
Yeah,
fund.
but they haven't really given us their numbers.
Right. As that changes, these numbers will change inside the general fund. But for the time being, it's all being funded from reserves.
They did give us the numbers, though, on subsidy, $551,000.
Well, that was from the first draft, right?
That was
I'm
on the
saying
first draft.
They haven't made the
But
revision.
we already know the first draft was not very accurate, right?
Correct. There's some changes there from the revenue standpoint.
Yeah,
that
they asked for the 551, but the other numbers weren't there to
Right.
substantiate the
Right.
551.
Correct.
Okay, we're gonna get to this at some point. I don't know where the right place is, but the 900,000, I'm assuming, is the kitchen project.
Yes, sir.
Why are we still budgeting 900,000 when we have said, we're not gonna do the whole project? We've authorized construction drawings to try to pin down the construction cost, and the expenditure is not gonna be 900,000 unless we get totally surprised. We do have one quote based on less than perfect information. So why hasn't that number been reduced significantly to, say, pick a number, 700,000, which I would hope we would be still beneath? I don't understand why we're still budgeting the full amount. It's not like we don't have a big enough deficit here.
Yeah, so what we did is we took the Marmer proposal, which his proposal came in at $1,090,000
But that included
That-
$565,000 in equipment.
$500,000, right, in equipment.
Yes.
We've taken that out. We got to 600,000. Then we plugged in, well, we're gonna still end up paying the consultant. We put in a $5,000 engineering fee, and then there's a contingency that we budgeted at, I believe, 10%. Was $100,000 in contingency, which that could be fluctuate a little bit. And then we plugged in 218 in equipment. So if you eliminated the 218 in equipment, we'd be down to 700,000. But
We
we know
can
that
provide a breakdown. We'll send that to you. We'll have it for the next meeting. We'll
Well,
give a breakdown.
It's on the last capital improvement project worksheet.
What proposal do we have?
Well, we don't have a proposal at this point.
We don't, we just use
What
Marmor
we've said is we're going to evaluate the cost of the building expansion and the two pieces of equipment, the only two pieces of equipment that it makes sense to buy on the front end, being the dishwashing equipment and the range hood, which will cost us dramatically less if we put it in during construction than if we do it after the fact. So,
right, if we go back to just construction only, we're at 500 plus, just in construction. Take the 1 million, subtract out all the equipment, we're at 500,000. Then you build in contingency, the consultant, and engineering, you're probably back up to around 600,000, just on cost.
contingency is not 100,000 based on 10% of 50, or based on 10% of 500. I just think the number's inflated,
Right.
and
At the last meeting, the number I wrote down was, he said we were at $410,000 in equipment, and they could live without 72. So the net equipment buy they were recommending was $337. So how do we get, isn't that the last number we heard?
that was the number that Ron gave us, and they were trying to prioritize which equipment they would buy, but we're not going to
That
buy
was-
all that in 2019, and, I mean, that's a phased, that's going to be a phased thing, very phased, probably.
Well, we asked them, that's what we asked them for, is what they needed up front.
Right, so,
And they said 337. I'm
they're
not
still
agreeing with it or
recommending
disagreeing with it, I'm just saying that's the number they gave.
That's what they'd like to have.
right, so if we budgeted their 337, this would be $1 million project.
Right.
So we're trying to make this as accurate. Once again, there is contingencies that a little bit high, but we haven't even plugged in the 337.
We're trying to do the minimum we can do to address the safety and sanitation issues which have to be addressed.
I don't know how...
After that, it's going to be piecemeal,
Yeah.
and it won't occur next year.
I'm glad we voted on all this.
We didn't. That's what we've asked to get an evaluation of. I mean,
I don't think we have a number to work with, do we?
We do, but, you know, correct me if I'm wrong, and I'm sure all four of you will correct me. At the previous meeting, we were really jumping the gun on a few things. We're saying we don't even know until we get the construction drawings back as to what the number is going to be for the construction aspect. And what they did is they try to base this number, I believe, this 900,000, on Marmir's construction. As Omar said, the contingency or the consultant's fee, which is part of the project cost, and we've already paid them $35,000 or $40,000 roughly, so they're not going to be getting too much more money from us. But this is only a place marker of the 900,000. If it comes in at 800,000, then that's kind of the number we're going to have to make a decision on. I'm not saying what way I'm looking or leaning. I'm just saying that's the number that we would be looking at. I don't know that the 900,000 is so far out of whack based on what the golf operations came back. Tom came back and said, after sitting with Kevin and so on, what the minimum amount of equipment they needed was pretty high. It was in the $300,000.
It was 337?
Yeah, it was 337. It was pretty high, and I think we need to be looking at the whole picture here. If it's 337 and it's 600,000 for construction costs or 500,000 for construction costs, then we need to be looking at a $900,000 number. I'd hate to put 500,000 and then come back and say, okay, we have a shell out there with no equipment in it. It just doesn't make any sense to me, in my humble opinion, but...
Plus, we have to also keep in mind, if we're not going to do it next year, which I'm not saying we should or not, then we got to tell the golf people, because they're basing their budget on 3 months of closure.
Right.
That's correct.
So, that changes their whole picture if we're not going to do the restaurant next year, if we're going to push it. So, I don't...
I heard
That's
back
fine.
from,
I mean, I'll leave it there for now.
Oh, I'm not saying which is right or wrong. I'm saying I don't think we have enough information at this point to make a call.
It's fine.
Because if
This is just an
we do
estimate.
push
It's
it,
just
they got to
estimate.
change their whole budget,
All right.
because their revenues will go up.
We all square on the reserves and how we're balancing it? For now?
Well,
For now.
I understand what the numbers say. I'm not saying I'm happy with it.
Yeah.
I mean, 1.7 is not going to happen.
No, right.
I can tell you right now.
That'll be the fun part through this process as to what we're going to accommodate, what we're going to cut, what's a priority, and
Yeah, I think 1.7 is really a wish list item.
yes. So, page 30, we'll start on the capital. Once again, we've touched base on a few of these things. I'm just going to run down through them. And if you have any questions or particular detail on one, we can go to that page. Administration, once again, we budgeted $32.5 for server upgrades. Security's asking for a gator for $9,000. We got roads and sidewalks for $350,000. A forklift for $23,000. A skid steer, $83,000. The Alamo mower, $44,000. Drainage, $350,000. And then the clubhouse project, $900,000, gets you to total capital expenditures for this proposed budget, $1.791 million.
I'm not going to beat up the individual items here. I just, what's roads and sidewalks is using a forklift for the purposes of what?
On the new maintenance building, we also have storage up above all the offices.
So it's for the maintenance building?
It's in the maintenance building, but it'll be used for golf and us both.
And we don't own one?
No, Joe, no.
No.
We had it in the budget
Was in the
last
budget
year.
We had a budget
year.
last
We cut
year, we
it.
pulled it out because, we were spending a lot of money over there,
So,
we
it's really
also-
under your organization for the maintenance facility?
Yeah.
Okay.
Exactly, yes.
All right, let's talk about the skid steer.
Okay, skid steer. Skid steer is probably used more than any other equipment we have.
I'd like to know what that means in terms of hours. I'm assuming it has an hour meter on it.
Bet you we use it at least four times a
Does it have an hour meter on it?
Joe, I don't know for sure.
If it's got an hour meter, the hour meter reading should show up in your PM records, and we should be able to say it was used 200 hours last year, or
We use
800
it.
hours last year.
Okay, road uses it, golf uses it, water and sewer uses it. Okay, all three departments use it. We also use it for drainage, obviously. To me, that's the most important piece of equipment we need.
And I'm not arguing with you. And what was the maintenance cost on the existing unit, and how old is it last year?
It's 9 or 10 years old, Joe. I mean,
And how much did we spend fixing it last year?
not last year, the year before, we put in about $5,000 or $6,000 into it. We used it on the golf course quite a bit last year. It takes a real beating. If we need anything, we need a skid steer.
And are we going to keep the old one?
Yes, absolutely. Yeah.
We
Because
actually
there's many
haven't...
times that we could use an extra one because we're in two different places.
Okay, I'd like to know what those hour readings were
all right.
last year.
All right, I'm not sure about the hourly. I don't know.
we'll provide that for the whole
Yeah.
board, okay? We're
Yeah,
going to do
I'll get-
hours, we
I
need
get
to
it,
find out what the
yeah.
R&M is and the age and the brand.
Okay, the remote control mower.
Yep.
My first impression is, nice toy. Still takes a man to run it.
Yeah.
How much of what it would do could be done with that same man in a self-propelled push mower, if you will? Some other piece of
Well-
equipment that doesn't cost $44,000.
With all the new drainage we put in on Matanzas, on both sides of the road, we have to send 2 or 3 guys in there with weed whackers. We're doing it weekly right now. We would use that. One man would, even the back hills over in the driving range, we also would be doing the ABC streets. We would also be using it over there. We have 90 miles of roads in here. And we would use it on Unit 2. We'd use it over in the golf course. We would use it for drainage.
So basically what you're
And
saying
it's
is
a lot safer to use.
you can,
Because you're not right.
A, safety, but B, no more weed whacking in those
Exactly.
areas. So instead of having 3 people, you got 1.
One, exactly. And it's also quicker, and it's also safer, a lot safer.
Okay. So probably
You know-
pay for itself in terms of,
Within a couple of
Lower.
years, it'll pay for itself, absolutely, as long as it's well-maintained.
Do you not use that sidearm to cut some of that
The
stuff?
sidearm, the new sidearm that we're getting can't get into the areas that this can get into.
It cannot, you said?
Cannot get into the areas, the smaller areas. So we are also have a demonstration, and I think it's gonna be next Tuesday, I'm not sure. I'd like everybody to come and see it, because I've never seen it either. I've just talked to a couple of different departments that used it through the state, and they loved it. But,
You're going to have a demo on this when,
I
next week?
think next Tuesday or Wednesday, yes.
Can you inform us of that?
Yep, absolutely.
Thank you.
Yep.
All right, let's talk about roads. Myrtle Beach, Pebble Beach, Woods and Irons. Why those 3 streets?
Well, I got it right here, I got some notes. We have a microservice on it, okay? It's, years ago when they did these, it was suggested through the engineers that we use not to use this material because it doesn't last long. Well, they're absolutely right. We get a lot of complaints through those areas that the driveways are all breaking up, the road's breaking up, so we've been over there a lot. And I took Drew out there, and he also agreed that because we're building over there, the amount of traffic's over there, that's why we decided to put those on the list first.
Well, I've driven those streets. I see no sign of any pothole repair or other significant repair. The streets are smooth. They're still crowned. I guess if those are the worst streets we got, we shouldn't pave any. That's my
They're
opinion.
not the worst streets we got, but those are the most heavily traveled, Joe.
Tanya, are those 3, they're not, if I remember right, though, last year when we had that study, those 3 weren't even on there, were they?
No.
As the number 1 wants to get...
And I don't know how they could be heavily traveled when nobody goes on them but residents and people to go visit residents. I don't see those as heavily traveled streets. I don't agree with repaving those streets at this point.
Oh.
There are a lot of streets that need attention much worse than those do, and to spend $400,000 to fix something that isn't broken makes no sense to
Well,
me.
the ABC streets is also on our list. You know, we'll give you the list.
Well, I don't see them here.
Well, they're on my list, so.
Tanya has a chart
They're in the next
somewhere.
year. See, we put on this year. On page 34, you have it?
That's what I'm looking at.
Okay. Okay, we got Myrtle Beach, Pebble Beach, and Woods and Irons. That's where we get the most complaints about the roads. We've got a lot of residents complain about it, right? So we're gonna reach.
Who's complaining and what are they complaining about? Again, I've driven those streets numerous times in my car, in my golf cart. I don't see anything there that's going to change when we repave them. So what's the complaint?
We had an engineer come out, and he agreed that they need to be fixed.
Is it
I'm not the
documented?
engineer.
Is that documented? I want to see that engineer's report that says those streets need to be repaved, and I want to understand why.
Okay.
I think it's the wrong place to spend $300,000 unless there's something
Where would you
obviously
start?
I'm missing.
Okay, where would you start? You said you better know.
Can I interrupt here for 1 second? There was a report of, trying to remember if I was
From the
even on the
The
board.
county prepared an assessment.
There was an
report,
assessment,
yes.
and they based it on surface, how much the surface, they measured it out and...
They did.
Do we have that report still?
Yes, I do.
That might be helpful if we had that as supporting documentation.
Yeah,
I mean, I
it's
happen to
several
live
years
on that
old,
street,
but-
and I hate to say it, but I almost agree with what he's saying. I'm not sure. There are other streets, I think, that might need more attention than that.
That street does not have potholes. Again, it goes back to what streets were microsurfaced and
But-
which ones weren't.
That's what I was saying.
But I can give you that report, yes.
If it is the
County-
microsurfaced issue, then that sheds a whole different light on things.
Well, it does if we can understand the microsurface issue.
Right.
I mean, the things I'd like to know is, how much blacktop was there when the street was built? How much is still there? What's the expected useful life? I see no deterioration that indicates that repaving makes sense. And I'm not talking about one cursory trip down there with my headlights on. I'm talking about several trips since I saw this in the line item in the budget. I don't understand.
Well, there's a lot of, I don't know if this is what they're referring to, and maybe, Michael, you know, there's a lot of surface material that is coming off of that street.
Exactly.
It's
And that's
almost like
microsurface.
small little pebbles
Exactly what it is.
consistently coming up. I
going
did
where?
notice that.
Now,
Where does it go?
You
What?
go, hits your
washes off.
windshield, it goes to the sides, it goes into your grass, it goes into your driveways, it goes into the drains. But I don't know if that's significant enough to say we need to spend, $360,000. But if that's part of the issue, then we need to understand that too.
I think,
We'll get you that report.
well, I think we have to see the report.
Yeah, okay.
And see what it says, but I think that the board has to allocate monies. If we don't think, if we all agree, based on this report that we're going to see, that there is road work that needs to be done over the next 5 years, that's fine. But I think we are the ones that should determine exactly how much money we spend.
Correct.
And then you guys can decide what the priorities are based on the number that we give you. Would that seem the way to go?
We estimate about $100,000 per mile. That's about an average estimate.
Well, I understand
Depending
that,
on
but
the
based on
depending on
our
the thickness of the
financials,
asphalt.
maybe we only can give you 200,000 each year over the next 5 years, instead of the, whatever it is that you're asking for.
350.
But I think we have to give them the direction, and then they can pick the roads.
Would you say roughly
$100,000 per mile.
Per mile?
Depending on the thickness of the asphalt.
This
I'm
whole
just
thing-
looking at the numbers here. I'm
this whole
seeing
thing is 22
2.1.
miles.
I
This
see
is more.
2.1, and it's 200,
It's 22 miles, this whole thing.
the whole document.
I added it up, 22 and change.
About 1 inch thickness on $100,000. Okay, 1
It's
inch.
$100,000 a mile. Okay.
But if that's the case, you have a high and a low
And it's
cost here.
130 if we have to grind it,
I'm just saying, if that's the case, you have a high and a low estimate in the year 22-23 for 2.1 miles at a high end of 294, which will probably be higher because by then prices are going to go up. We know that. And that's not, in my math, that's not $100,000 per mile is all I'm saying. Okay?
No, I
It's-
think Frontage Road, too, the difference in Frontage Road is there was no milling that needed to be
Right.
done.
Okay.
Pebble Beach and Myrtle Beach, some of these streets need milling, which adds cost
Yeah, it's
to that $100,000, because it's not just straight paving.
Who ultimately will do this work?
Excuse me?
Who ultimately will do the work?
Well, we asked 2 contractors to come out just to give us they took a ride in, and let me see, Tao was one of them, and
So we have 2 options. We could either piggyback off City of Avon Parks or another city's paving contract, or we can put it out to RFP ourselves and get lowest bidder.
How would we know if we did do a piggyback? How do we know that the piggyback would be better than the RFP? Why wouldn't we go out for an RFP and then piggyback?
We could, but I'm sure Mike has quotes
We
from
could
those
get-
same contractors.
right,
So if they're charging us $2.50 per square foot, and Avon Parks is $2, then that's a pretty
Okay.
much done deal. So we do have some numbers that would substantiate why we would go down that road.
Okay. Just trying to understand it.
Yeah, especially when their contract is 3 or 4 years old, you could pretty much bet that that's slower than what you're going to get today. So.
I'm not even going to ask why we ignored what the engineering firm said about don't put the micro whatever on.
Well, this was years ago, Mark. Right. It was years ago, and they absolutely don't do it, but the past people in charge decided it was a lot cheaper, and they did it.
As we discuss this a little bit further, the road paving, because somewhere some places need to be done. I haven't driven every one of these places, but you came up with this list based on needs and things of that nature. Why? No, never mind. I'm going to just withdraw the question. I'll wait until we get the report.
Okay, we'll get it to you. All right.
So,
What we're,
we're going to get the report, and then we're going to revisit it. And I assume, are we all in agreement that we're going to come up with the numbers for them?
Of how
Or
much
no?
of how much to spend.
Well, how are we going to come up with a number?
Well, I'm thinking it's in the best interest of Sun and Lakes to have an ongoing road upgrade program. We need to repave quite a few streets here. I'm only questioning whether these are the right streets for us to spend $350,000 on, if that ends up being the number,
Okay.
versus other streets which I feel are dramatically in worse condition.
Well,
we'll
I
give you the
agree
report and go
with
from
what
there.
you're saying, but I can tell you that we can't afford the numbers that are on this page. I mean, the total number is, what is it? Roads and sidewalks, 5 million, 2.3, it's about $2.6 million. It ain't gonna happen.
I've been in the district here for 9 years, part-time, full-time, and roads and drainage, and I say roads and drainage and infrastructure has been something that we have, I say it at every single meeting, I will continue to say it. It is a line item that we seem to slash and cut every single time. We will never get ahead of this game if we continue to kick it down the road, allocate $200,000. We can't even keep up with the standard maintenance at $200,000. We need to take some serious steps as to where are the priorities here. You know, people don't see roads and drainage as a priority because it's not something they can reach out and touch. They can reach out and touch a building that's new, or a new kitchen, or any of those types of things. I'm not picking on the kid, but they can do that. They can reach out and touch it and see it and say, oh, there's some value there. But we're having, some serious issues with drainage, and we can't even keep our head above water on it right now. No pun intended, once again. So we either make a decision to spend money, reallocate it, or not spend it, and then have the same problem 5 years down the road.
And I don't disagree with you, and what Joe is saying is correct, but we're going to have to play catch-up, and it's going to take a while, and we don't have the money to catch up based on these numbers here. We don't have it.
But the problem is we also don't have a while in some cases.
Well,
I mean, we got streets that are deteriorating.
That's fine, and I'm not advocating cutting or not having a budget. Maybe in the next 5 years, we commit to $1.5 million. Or I'm just throwing out a number. And it's his responsibility, Mike's responsibility to take those yearly numbers and make them work based on what our needs are. But you can't just throw away you can't commit to $2.5–3 million. It's not there. I'm sorry that they didn't do anything prior to this. I'm sorry that we don't have the money to do it, because I agree with you. Drainage and road, it's very important. We can't let it go. But you got to start someplace, and we just don't have the money to do this much. Period. That I'm aware of.
right. So I guess just to touch on that, I think from the district's perspective, we have to start making this a requirement. We can't keep going down to 200, because what's going to keep happening is we're going to want to increase services, and we're going to make the golf course better. We're going to do new projects, and that extra $1 million is never going to come to fruition. We have to keep chopping at the bit in small pieces to get this accomplished. One of the numbers that I asked Mike the other day is how many miles we have in the district. He said it was about 90 miles. and the lifespan on a road is about 15 years. So to make your way all the way back around the district in 15 years would mean you'd have to do 6 miles of road every year to meet that 15-year deadline. Now, you could probably extend that to 20, but that's just a quick math figure. So out of the 90 miles, we know everything west of Cortez isn't high priority. Some of those roads are vacant. So what we're trying to take is how many miles have residences, are occupied, need to be addressed, put them on a lifespan cycle, 20 years, 15 years, set a date, and figure out how many we have to do to stay on track and keep pace. So as they deteriorate, we can come back and meet that requirement. Because right now, just picking and choosing, we're going to have a tough uphill battle as we go and as these start to deteriorate all at the same time.
Well,
So once again, saving $100,000 here may not be in our best interest.
I'm not advocating saving anything.
No, like I
here.
said, I was just touching on Ray Bruce's
Okay.
comment.
What I'll tell you is that if you take the average of these 5 years and apply it to the roads and streets that we have and the condition that they're in,
Yeah.
you're going to be in worse shape at the end of that 5 years than you are today. Because we have to spend significant money on that piece of infrastructure, and the drainage is of equal importance, to the exclusion of anything that's a luxury. Now,
Right.
having said that, we're way undersized on some of our amenities, i.e. the pool and the racket club. We have a lot of other things that are going to create demand on our funds,
Right.
and we aren't positioned financially to get through the next 5 years and end up where we need to be at the end of that 5 years. That's a fact. So I'll look at assessments, I'll look at water rates, I'll look at golf fees, I'll look at everything.
Right.
Is the only way we can ever get to where we have to be. Short of an unbelievable amount of debt, which is probably not doable right now with some other conditions that we deal with. So all I'm saying is spend it, but spend it wisely.
No, I agree.
And if the life expectancy of those particular streets that I'm objecting to is 5 years, then it shouldn't be in a 5-year plan, it should be in a 6-year plan. Now, that's my opinion, nothing more.
Right.
Any other further questions in general fund capital?
so where do we go from here? Just so
On
We're gonna give it
the
a
roads?
report.
yeah, where do we?
We're going to review, like I said, we're going to work with Drew, Mike. We're going to do an updated assessment. We're going to give you condition levels of roads, traffic, how many homes, useful life, when they're going to go bad. We're going to prioritize them, come back, and tell you exactly if we wanted to come up with this preventive maintenance plan and stay on top of it, what we need to get done and how much it's going to cost, and then we can go from there. I think until you guys have that, you really can't make a really informed decision.
And you're going to get us the report.
I'm going to get you the report, but the information that Omar's talking about, I'm not sure how fast we can get that due to today's circumstances with Drew's family member.
But we know where
Okay.
he's going to start, right?
Sir?
We know which streets he's doing first.
Drew?
Yeah, I think we're going to use,
I mean-
we're going to have to use the prior year assessment from the county, use some of those assessment levels.
I've read those, they're pretty,
Yeah, they're pretty.
there's not much detail there.
He's going to have to go
We're
through
not.
that list and make his own assessment and see whether they're accurate or not.
Yeah.
So it's going to take him some time. Whether we meet the June 20th deadline, we don't know until we have a better grasp on what's going on with June
My
1st.
point was, if Drew's going to do these evaluations, I'd like for him to do the 3 streets in question
Yes.
first,
Okay.
That's perfect.
Yep.
so we can focus elsewhere if that's what we decide we're going to do.
That's perfect.
Okay.
All right. We all set on golf, general fund capital? Were you going to touch on drainage at all?
Talk to me a little bit about the drainage. $350,000 for the Phase 3 drainage.
Correct.
Is that what we're, 350 is a good number?
That's the correct number, yes. Based off the projects that they listed in Phase 3 on the description.
We feel comfortable with that number then?
Drew has, we didn't provide it in this budget book, but he has estimated figures for each one of those projects that sum to that total.
Okay.
Is that going to address the flooding that we had last September? Any of it?
Sure.
In what,
What areas?
in what area, Dan?
The ones that we had the problem with? I mean, Obadiah, we had
Yes,
people in
yes.
here.
Well,
we
we're
got
addressing
water
part of it
standing.
now. What we're gonna do is we're gonna keep continuing, is where we stop, we're gonna continue with next year's budget, you know? We're actually in pretty good shape on Matanzas now, in that area. I did get a couple calls during the storm last Saturday that people had water in the ditch, but they're gonna get water in the ditch.
Waters in the ditches aren't a concern. It's a concern when we have water on the road or waters in a house.
Right.
I mean, that's where our concerns are. We hope not to have another 14 to an 18-inch rain event like we did. This budget does address some concerns on Columbus. It does address some concerns. Where else do we have some water?
We had,
On Monza? Of course, that would have to be agreeable with the homeowners there, because that would be digging up
they part of
the
it.
driveways.
The culverts and stuff.
Bobadilla has, the culvert has been, has there been some pipe installed underneath the road already?
Yes.
That was a fairly inexpensive fix, is that correct?
Yeah, we got that done.
And that's
cheap.
been finished.
But we have to continue after it goes under the road. We still have to continue it out towards the back of Cortez. You know, I mean, you know, there's areas we have to address. We know the areas we have to address. We are going to address those areas. Even in Unit 2, right now, I met with the contractor this morning. They're cleaning all the culverts. That's actually going pretty well. That's going to help us with the drainage.
Well, I guess point being that we had residents who had problems who came in and discussed them, and we said we'd fix it, so I just want to make sure we're at least paying attention to that.
We are. Absolutely, we are.
And I know we had-
probably met with, I can't think of the guy's name, Mike, that calls me all the time. You know, we're addressing his problem. I've talked to him quite a bit, actually, about it, and,
We basically had a swamp behind Kenny Ross's house. I don't know if we looked at that or not. I
right.
asked Drew to.
On the back of Kenny's, we are gonna put, or dig the swale deeper there.
We're going to
and-
clean back there. We're going to
Clean
clean
back,
back along behind his house and then along the vacant lots along that easement, because there is a swale issue, some drainage issues there. So
I just didn't
that's
see it in
that's going to
here.
be some handwork. That's not, it may be some machinery, but otherwise it's not going to be
And a lot of that's
major,
in-house.
there's no pipe
We're
that's
gonna
going to
do it
be
ourselves.
installed there.
Okay, so it's not in this budget.
Right, it's not in there, but I know it's gotta get done. We actually been working on it. So,
Okay.
okay?
I'm good with that. I
The
just want to
problems
make
on the
sure.
north end of Columbus, we've done some work out there. There's a new culvert underneath the cross street.
Yeah.
Do we think that's dealt with?
No,
or-
that's not gonna solve that problem.
It's not gonna solve that
The
problem.
problem is it at the beginning by Menorca? Okay, we are gonna be doing some ditch work out there. And we're gonna try to, and hopefully, I've had 3 contractors out there, and it's pretty cheap money considering, but I wanna make sure it's gonna work before we do it.
Okay.
I just want to make sure we have our priorities in order.
Yeah, we do. And we are dealing with all the residents. Whoever calls, I get right out there, and you know, we're trying to work with everybody. But we are doing a lot in-house too, so.
That's even better. I mean, I'm good with that. I just want to make sure.
We're saving money that way.
The reference to these discharge pipes, what is it, what's going on with those?
The ones like on Menorca?
Well, over Magnolia, the ones over here at the district, to the pond.
Drew's worked on a plan by the district is to, we want to put a drainage pipe from the pond to Southern Lake Boulevard, so it will drain. Right now, when it overflows, it drains into the garage.
Okay, so it's
So
just to
we're
go
working
out
on
to the
that,
main
absolutely.
roads to
Yeah.
discharge,
Yeah.
okay.
Yeah, we're working on that.
I have a general question about how we do this. Let's say we give this, we agree to $350,000 for the drainage projects. and I know we go through the bid process, and let's say the bid process comes out totally to $250,000. What happens with that other $50,000?
We can keep it in the budget, or we can reallocate it to another project.
Well, I think, you keep it in the, you mean leave it there, or?
Leave it there.
I think if we don't spend money that we allocate, that we should get it back and put it into a, I don't care what we call it, fund. It could be a district manager fund, it could be a supervisor's fund. But I don't think it should be left in that budget, because it's not, it would not be used for the intended purpose.
No, and typically what happens is if there is additional savings somewhere, we will come back to the board with a request for an additional project or where we want to spend that money. A scenario is,
I just don't think you guys should keep the money. I see a lot of money
that's what
being
I'm
spent.
saying, we're coming back to try and spend it somewhere
But I
else.
see a lot of money being spent that I don't understand where it's coming from. It's all under $5,000, and it's a nitpicky here, and it's a nitpicky there, but we spend, and it's not necessarily you, this is golf course conversation as well. There's a lot of money being spent that I can't figure out how they're doing it.
Well, if we have money left over, I'll usually go to Tanya and say, Tanya, can we go fix this? And she'll look at it.
But then that should have been requested to begin with. I just think that we're out of control, and not you specifically, I'm talking now in general. I just think people have leftover money and they're just spending it at will. I don't think that's right. That's not what it was given to them for. Okay,
Well,
I guess I said my piece.
I think if, once again, if it's something that's important enough, over 10 grand, you guys are going to be aware. If it's a repair that's $3 grand and we make a judgment call, once again, you're entrusting us to make those calls and spend the money fiscally responsible.
Let me tell you what's really irking me the most, is,
Go ahead.
and it's the golf course. And I love what he's done to the golf course.
Right.
But I can't figure out where the money's coming from.
Yeah.
I don't know, and it's great. The golf course looks great, everybody's happy, blah, blah, blah. But I don't know where he's getting the money to pay for the damn thing.
Right. I guess
Mr. Brooks, we could sit down and I can show you some budget numbers and where they are in their cash flow and where they are in their budget, which is very important to know as well in the maintenance department.
For
Yes.
staying in compliance with his budget. If he goes over the budget and spends money that he doesn't allocate, he's going to be coming back and saying, I need more money. And at that point, you can question,
Well, hell, we
why do
already
we
gave
get
him
here in
more
the
money
first
than, we give him $500,000-$600,000 a year.
Right.
The April financials will be
They're already
provided.
completed. They should be online. I already reviewed, so they should be online now.
I just think if money's not used, that was given to any account, I think it ought to be returned, so we know where it is. I don't think that's unfair.
We'll take a look at the golf maintenance budget for April and see.
But it's the same thing, if, on any account, $350,000 is a lot, and you specifically have spelled out what you want to use that for, which is great, but if it comes in at $275...
right, and these are estimates. These absolutely are
And
estimates.
I understand
Just so you know that. So they do come in cheaper,
Right.
or sometimes they come in over. So you have to understand that.
I haven't seen one over yet.
When they come in over, you usually ask us for that additional funds.
money, right.
Rarely do you ever say, oh, we came in under, and by the way, we have this extra money. I mean, it works both ways.
I just think the money should go back into an account, so that if you want to do something else, you come and we'll decide whether we want to give you the money for it.
And I thought that's what
It's not-
That's really what we do. but
That's
it's
what we
staying
do
in the
it.
budget. We're not going to do a project over 10
Right.
grand without asking you. And I think it comes back to the same objective. I think you're questioning whether it's 3 grand or 5 grand. And once again, do you
I'm
guys
telling
really
you,
want to be involved with
This is a
this
serious
decision?
situation in finances right now. So $3 grand is important to me.
Okay.
It is.
I respect that. I don't think we need to come to you for every $3,000 purchase either. So I think that's ridiculous.
That'd be crazy.
Yeah. There's no way in travel and training, if I want to spend an extra $1,000 in travel
If
and
you can work
training.
it into your existing budget, that's fine, but if your budget calls for major purchases and you don't need that money, I don't think...
That's what I'm saying.
you
Anything
need
that's
to keep-
allocated for drainage, equipment, major purchases won't be used for operational if there's 350 and Mike has another drainage project, we're gonna come back and try and spend that 350, because you've allocated that 350. We're not gonna just say there's 100 grand.
I don't
Mike's
think
gonna-
he should come back. He's got a 5-year plan. He's gonna come back and what? Move the...
If we got
next
lower
year-
prices-
The next year's project up?
Well, yeah, why wouldn't we?
Well, I think we have to be a partner in that.
We would come
And you
back to you
are.
with that.
We have to be.
If it was.
Well, I mean, I thought you were.
We'd come back.
We have to include the board in those decisions.
Right.
That
They
is-
come back to us on
Absolutely.
that.
All right, you want him to keep the money, that's fine.
Page 41?
Page, I'm going to ask you to go ahead and jump over the memo unless you want to look at the 5-year capital.
Just quickly look at the proposed
That's based
capital
on-
plan, in case somebody has a question on it.
Yeah, if you have a
I
question.
don't, but
Yes.
somebody else might.
Page 41.
Page 41, capital
Is the
plan,
5-year
anybody?
capital plan that we've gone over a couple
Yeah,
times.
I think
Mr. Brooks?
the 5-year plan's got to be adjusted dramatically. I'm tired of it.
Mr. Brooks, did you want me to go ahead and bring up the
We can't
improvements?
afford the 5-year plan, can we? Why don't we
Not
face
with
reality
current,
here?
not with current rates, we cannot.
Well, then we have to adjust it, should we not?
Tell you what, why don't we just do this? Wait until we get the reports back from the
From-
consultants, kind of get an idea where we're going, and then we'll reevaluate the 5-year capital plan. Can we do that?
You have $1.5 million obligated for the district office. Why don't we just say, it ain't gonna happen in the next 5 years? What's wrong with
Then
saying
we can
that?
take it off. I mean,
You
got
can
$1 million
remove it.
I mean,
But-
we got $1.5 million for the
But you're-
new pool complex.
but we need time to be able to put together a financial plan until we know where our revenues stand. It's changing all the time. The 5-year plan will change. I mean, we know what our needs are now. Now we need to come up with what our revenues are going to be to be able to pay for those needs. That's what the 5-year plan is. So we certainly can take it off, but before we...
The 5-year plan, to me, is an achievable, realistic goal. Not
I agree.
necessarily you can hit it on the nose, but if it's way out of whack and you're asking for $7 million that we know we're not going to have, that's not realistic.
I honestly feel like
I
the 5-year
didn't say
capital
that
is
we weren't gonna
achievable.
have it.
It's all relative. If we increase subsidy for golf $1 million, then no, this is not going to be achievable. But if we decrease it to $250, then yes, this is achievable. The one that sticks out are the major capital projects, and that's where we're going to have to allocate our reserves accordingly, decide whether we're going to use URF, take out a loan. Those are the big key items that we need to be looking at. Everything else on here, fitting in $300,000 for drainage and roads, we can accommodate that. What we can't accommodate is all the capital expenditures and golf subsidy to an extent. That's where we're going to have to
So
nip
we
it.
can accommodate a community center for $1.5 million, or whatever it is? I'm sorry. New pool complex for $1.5 million? We can accommodate that?
Maybe not in that year, but once again, we're putting that out there 4 or 5 years out to keep it on the radar.
Well,
I think you have to treat, excuse me, but I think you have to treat the 5-year budget as a document that recognizes future needs.
Right, exactly.
And the things that are in there are placeholders
Right.
until the budget discussions begin. So whether the office renovation at $1.5 million comes out of the 5-year plan or not is a non-issue to me. We need additional pool facilities, and taking that out of the 5-year plan would be a mistake.
Right.
Now, maybe it doesn't get done till year 6 or year 7, but it has to happen. We've got a pool that has a membership that is more than double its capacity. A paid membership that's more than double its capacity. That doesn't count yours and mine as golf club members.
And
So,
I'm not arguing.
losing the recognition of those things is the wrong thing to do, and if they're not in the 5-year plan, you're not going to recognize them. They won't exist.
All you have to do is add on another column. It's 5-year plan, and then there's future desires, or future wants, and future needs.
Why can't that be put?
If we can't do a district law for the next 5 years, but we have to do it eventually, you put it in that extra column. You get it out of the 5-year plan. So when somebody else replaces us on the board, they can see what they're up against. You don't put it down, it's not a wish list.
It is a wish list.
It has to be. Because if not, you put it in that column, the district office, for example, is never going to get done. It's been pushed back if you can go back to the last 4 or 5 budget books, and it's been moved and moved and moved, and you're never going to hit that objective. And especially taking into consideration,
So why would you list it here?
this doesn't take into consideration things that come out of the blue, like the golf irrigation. No one expected that 1.1 million to be addressed, and all of a sudden it shows up in 1819. So was this an attainable goal? Yes, until things arise that we can't plan for, and then we have to readjust. So yes, this is a moving target. It's not 100% fixed. Every year we go through this project to see what we can and can't do, and then
I thought when we
readjust.
first did this, we thought we were $7 or $8 million short.
I guess I'm
Isn't that correct
you're trying
about
to take
that?
into
We were $7
consideration
million
spending all
short?
this money, and you're not taking into consideration the annual budget. So when you say $7 million, it seems out of reach, but you're not plugging in.
No, I am plugging it in. I
revenues
thought,
are-
I was led to believe,
7
'Cause this
million
is
is
like
out of
17
reach. $7 million is out of reach based on our current revenue base, but
Right.
these projects are on our radar, and if this is what the board wants to do, if there is a need, whether it's irrigation, then it's our job to come up with where the revenues are going to come from, whether it's debt, whether it's operating, and the irrigation was kind of thrown into the mix, but it's our job to find out where the revenues are come from, and the
so
board
you guys
approves
are
the project.
comfortable that you can find $7 million over the next 5 years?
That's not what we're talking about.
I don't know that I'm comfortable with that or not, but it's our job to research that based on the board's goals and approvals. We need to look at that as a community. So,
Ready?
I mean, I just look at it differently, so that's fine.
Thanks, Omar.
Mr. Brooks, do we want to mention the Racket Club improvements
I'm
right
sorry.
now, since we're on the 5-year?
Well, yeah, 7 million, 7.2. Yeah, let's
The-
bring that up. Oh, you want me to bring it up? Well, you can
Okay,
bring it up.
I have some information.
Okay.
Based on the engineering estimates for the Racket Club improvements, there was a last budget discussion, or we had the last 5-year capital discussion. Drew had come up with some estimates for Racket Club improvements to include bocce, shuffleboard, and a pickleball expansion in the near future. So Mr. Brooks had looked at it and is proposing that the area over here by the backside of the tennis courts, pickleball courts, be cleared, along with a new shuffleboard expansion and lighting for a Phase 1. And the Phase 1 cost would be $207,000. Is that,
Right,
I don't have the,
yeah.
205?
I think that was,
Sorry about that. Let's see. About 207.
oh, I didn't, that was good. No wonder
So-
we don't have it. Yeah, 207.
With these type of upgrades, our available funding could be from the Highlands County Recreation Parks and Advisory Committee. The county does receive funding every year that has to be used for recreation. If we were to put this line item in our budget, we could apply for that funding from the county at a 75% county-funded and a 25% match from the district. That is an option that we do have for recreation funding. It's not currently in our capital 5-year plan for any expansions on that facility, but we're Mr. Brooks is proposing to have us look at it and put it into our capital plan for next year.
At the 25% level?
Well, we would need to budget for the entire project, and of course, once it's budgeted and appropriated, we would apply for a 75% reimbursement, and of course, we could make the budget, of course, contingent upon that receiving funding for that project. The RPAC meets quarterly. They haven't met in the last 6 months because there has been 0 funding requests.
So you'd be putting in a little over 200,000, 220, 225 into the budget?
If the board's agreeable.
Over and above what we have right now?
Correct. If the board's agreeable to do so.
But contingent on?
It could be definitely contingent upon that.
Getting the 75% back, which always is, I think we need to do that. Look at the RPAC money. I always have a concern about opening up the community to the outside, and now we're locked in, and once we take that, we're indebted to allow anybody to come in.
That's the way we're currently designed for our racket facility. We have memberships for residents and memberships for non-residents and daily fees, so that the way we currently operate meets the requirements of the RPAC.
Did we get 75% when we did that?
We did not. We did not apply for any reimbursements on the tennis pickleball courts.
But we're already operating that way, so this really
We're
wouldn't
already
make any
operating
difference.
that way. We did for the last playground set that we have over the community center, and then we also did for the basketball court renovations.
Right.
And then we also, yeah. I
The
think that-
caveat is you do have to make it public, but doesn't mean you have to make it free. So we charge an outside non-resident rate
Right.
to those who are not a resident. And
So
we
you can
still,
follow the same schedule that we currently have if we feel that that's
Correct.
working properly.
Yes.
Given that, I have no problem with putting it in, contingent on getting...
Contingent upon funding.
On the funding. Just,
so we want to do phase one?
What's that?
Is that what you're proposing, phase one?
Phase
Yeah.
one?
And then I do the bocce ball the following year under the same circumstances that you applied for the money,
Right.
and then pickleball the third year.
So at the 225, at a 75%
It's
contribution.
207, it's 207 is what we estimated.
207, so let's
Yeah.
just do 210 just for, make it easy. It'd be a $52,000 cost to the district on that project.
yeah, basing on the 75%
Correct.
return or RPAC money.
But the kind of the understanding we had is if we don't get the money, we don't blow it.
We don't do
Right.
do.
We budgeted based on RPAC money being granted.
Right.
Correct. Is that agreeable to the board for phase one?
I think it makes great sense.
Sure.
Anytime we can get a $200,000 asset for $50,000, you know.
Sounds pretty
Yeah,
good to me.
one thing we discussed too is we've got it split into 3 phases, which is fine, but that means we have to go back to the county 3 different times.
We would.
So if we did the entire project, which is $400,000 at a 75%, it'd be a $100,000 cost, but we'd go one time and not have to deal with it
Well,
again.
the only reason that I suggested splitting is because we got some numbers. Their reserve was down to 200, 300,000, and they're going to get 500,000 this year. So they have 700,000 or 800,000 to work with for everybody.
But they
And
haven't made requests.
I thought going for the 400.
And also the needs of the pickleball. I think you were looking more towards the future, that we're not real,
Yeah, the
we're not real
pickleball-
sure the pickleball, we need additional courts because as our membership grows, that may be
Right.
an option. But the pickleball was the last in the phase, and if we
Right.
determine that, that we're not at capacity, then we could
We don't
certainly.
need to do the pickleball
Right, we wouldn't
now.
need to do the
Thought
pickleball.
process was the shuffleboard and the bocce, or whatever the name is for the bocce.
In your experience, out of the times you've applied for RPAC money, has it always been 100% successful?
Well, it has not, because the Ponce de Leon sidewalk was part of that process, and we did not meet the requirements of the statute based on just the sidewalk itself. If it was a multi-use path that we built on Ponce, then there's a great possibility that we would have received that, but we just have to be sure. With this project, we're in compliance with the statute as far as infrastructure and lifespan, so.
Not to beat a dead horse, so when we did the Ponce multi-purpose, we didn't do it as a multi-purpose, and therefore we didn't get the RPAC money for it because of that?
Correct. But I told the board at the time, I said, I can go and I'm going to try to get a reimbursement of 50% on the Ponce de Leon sidewalk due to the, with safety reasons, the location of the
okay.
school versus the community using that sidewalk. But there was an opinion from their attorney based on the statute that it didn't qualify for reimbursement.
Yeah, I don't think it was wide enough or something.
Correct.
Yeah, okay.
Correct.
I don't have a problem with it being added in there under the contingency that we would get reimbursed, and if we can't get reimbursed, then I wouldn't be in favor of it.
Should we go ahead and do a consensus, just to be consistent?
Okay, well, I think
Definitely.
I've heard from everyone, I believe.
Yeah, I think
Mr.
we've
Gilpin,
already,
do you-
yeah.
Okay,
All right, just making sure.
okay.
Jody.
All right, jumping into the utility fund, let's go ahead and skip to page 45, we're going to skip
Can
over
we
the memo.
just take a 5-minute recess?
What number we on?
You were on, what, page 42?
We're going to jump to page 45, we're going to skip over the memo.
Are we halfway through?
We're going to go,
Fly through this next section is going to be just a breeze, I tell you.
I doubt it.
Utility gets no love for some reason.
We're going to give it all the love it
He just breezed over all of the assumptions at the front.
So page 45.
Oh, gee. Okay.
Page 45,
Good, Omar.
the current effective rate schedule, we're proposing a few changes to the rate schedule that we'd like the board to approve. The first one is deposits for each entity. Homeowners don't have a deposit here at Sun Lake. Residential tenant is going up from 150 to 200, what we're proposing. Commercial tenants from 150 to 300, and Tanglewood from 125 to 150. What we noticed because of timing for bills, we're getting very close, and a couple times we've gotten burned from tenants because of the lag in time. So, as an example, the June utility bill was due 2 days ago. And it's actually for the period of April 8th through May 8th. May, we start producing that bill and it comes due in June. So there's almost a 2 month difference between when we produce the bill, what the service dates, and when you actually pay for it. So when you have a tenant that has an average $50 bill, they've come past due the first month, they get their second bill. Once we cut them off, they're already 2.5 months into another cycle. And then you add a disconnection fee of $20, and you're almost at that 150 mark right away. So it doesn't leave us a lot of room for, if they spend 170, we have no recourse to go back and get those funds from that tenant once they've moved out.
You sold me on the deposit.
It's strictly on deposit. So we've increased that 50. We feel like we've done an analysis of all the ones we've gotten burned. They've all been in the range of $10 to $15. So the $50 increment should give us plenty of cushion going forward.
Okay.
Rate changes, we haven't proposed any new rate increases. The next change comes on page 46. We've added the new account setup fee. This is a one-time charge. Anytime there's a new owner, tenant, any acquisition you come into the district to create an account, you will be charged a $20 fee for us to set up that account per property. This does not include any service change. So here at Sun Lake, you get charged the base rate. So 9 times out of 10, anytime someone moves out, they leave the meter on. There's no change in meter status because there's no benefit to turning it off. There's only an extra charge if you change that meter status. So now we'll charge you a $20. Let's say the meter's off. You come in and create an account, and you want that meter to be on. You would pay an additional $20. It'd be a total of $40 if there's a change in meter status.
Aside from that, nothing changed.
Including whose responsibility it is? When you say change in meter status.
So let's say you're an owner, you sold the property, and you turned the meter off when you left.
Right.
We charge you $20 because you performed that turn off.
Okay.
I would come in as a new owner, I would be charged the initial $20 fee for a new account, and then because I want that meter turned back on, I would pay an additional $20. So that'd be $40 for me, $20 for you. Let's say you left and you did not turn the meter off, you wouldn't have any cost to you. I would come in as a new owner, pay the $20 new ownership fee, and then the meter's already on, so I don't need to change, so I would just pay $20.
What about owner-renter? That would be more my question.
Owner-renter would be the same scenario.
Okay.
If you're
So
the
if the
owner,
renter moves out and doesn't turn the meter off,
the owner wouldn't have to pay the $20 on.
how do you know that as a renter I moved out? Or do you? You don't, right?
Well, usually as a renter, they protect themselves and they come in and do a turn off because they don't want the landlord or someone else using their water before they move out. So usually they're hedging, they conserve it for themselves, and they kind of fix that problem, because if they don't, then someone else is going to use that water for them.
That's fine.
So I want to make sure that was crystal clear. I might get some feedback on that. Any questions on those?
What's on temporary construction?
Yep.
Just that item, the service,
Yes.
the 6 months.
Correct.
Can you elaborate on that?
So we've put that in place. It's been in place for a couple of years. Give you a good example. There's a building on Granada that's been in process for a long time. As an added measure to try and promote them to kind of speed up the process, we do start charging them the sewer base fee once 6 months has passed.
totally off the scale here, maybe Michael can answer this, and this is a real sidebar. When construction starts on property here, is there any time frame that property has to be completed?
No,
None.
no, no.
So if, as a hypothetical, just to confirm this, if somebody came in and attempted to start to build 3 or 4 duplexes, and he or she, their company ran out of money, we would be stuck with those shells here. And we have no recourse to remove those. Is that basically true?
Yeah, we have a couple out in the country already.
I think we
Right,
had a
we
few
do.
in.
We have some.
We have
We
them.
have some.
That's
We
what I'm...
take the property over, we could, right, but if it's under bankrupt, we can't go on the property.
That skeleton can stay there,
Out
huh?
that way.
We
Okay.
had a house way out back, was, how many years?
Well, I'm referring to
We had
some
a
of
few
those out
on
there.
Bobadilla too, that there was a couple
Right.
shells during the downturn, and then they finally
Yeah.
caught them and fixed them up.
I mean,
but
Spring Lake, you go over there and you can see that. I mean, there's...
the only recourse we would
Okay.
have is if they fall behind on assessments, and then we can go through the foreclosure process, get it, and try and sell it through an auction or some
Okay.
sort of method, try and speed up the process. The next one is a rate schedule. We've provided a rate schedule comparing our current rates in comparison to all the other governmental agencies. We are the second lowest in terms of, 4,000 apples to apples water usage. So it's just, once again, this is informational. Right now, we're not proposing any rate increases, but it's something that we could look at if we needed to.
Okay. I'll bite right now.
Go ahead.
Thank God, somebody else.
We're going through this.
Yeah.
We have 2 sources of revenue.
Right.
One of them we're waiting on feedback from GAI,
Right.
and this is our second source of potential revenue.
Correct.
And no one's proposing a what-if hypothetical if we went up 3%, 4%, 5%.
So we know if we increase 250, we've done it for the last 2 years, that's $110,000 in extra income to the utility fund. The reason why there was no proposal is we go back to the fact that right now the utility fund is operating, it's taking care of all expenses, it's performing well, and it's saving $530,000 into the Euro fund. So me as a resident, my argument to you would be, you're already putting $530,000 away, you want to increase my rates, and you have $3 million in the bank and you don't have that allocated to anything yet. So once again, we could use that savings mechanism as a subsidy to the general fund.
But that's what they've been traditionally doing. You've been changed, the Euro fund changed, and you're transferring money in and out of that for capital projects.
Right.
So why wouldn't you continue to look at that as a source of revenue?
We are going to look at that, definitely. But we're not proposing any rate increases right now, but like what Omar is saying, that is an option we have, but again, municipalities use the utility funds and the utility revenues to fund governmental operations, including anything within the general fund. So that is definitely an option for us as a revenue source.
Like roads and drainage.
Did I understand correctly? You said we've gone up $250 the last 2 years?
$2.50 per month
$2.50 on the
per
base,
customer.
So the base rate 3 years ago was $12 and something?
It was, instead of the 1025 water rate, the base, I believe it was,
$5 and
take away $5 from
Well,
that.
I don't believe we went up in 2017.
625.
We didn't go up in 2017. I got the letter right here.
We went up twice in 3 years.
You went up September
Twice in 3 years.
September
So
11,
last year didn't have the increase, it was
Twice
2 years before that.
It was
September
twice in
11,
3 years.
2015,
Correct.
and then August 26th of 2016.
Correct, 16 and 15.
That's when we went up.
17 we kept.
Well,
the same.
But I want to make sure.
when are we going to discuss these type of things, whether we want to increase this or not? When does that conversation come up?
Well, we felt it was most appropriate once we get the GAI, because we feel, based off, preliminary discussions and in decreasing the vacants, there is going to be a decrease in revenue, and then we're going to have to figure out how to compensate for that revenue loss and different.
There's going to be a decrease in revenue where? In the assessments?
In the assessments, based on the rates proposed. Just
I thought we don't have that information yet.
We're still working on finalizing that, so you can have that. We're just doing.
But how do you know it's going to be a decrease?
Because we're just running preliminary, estimates based off what we discussed. There hasn't been a set number, but we can plug that into our formulas and our spreadsheets. And based off our collection ratios, if we decrease a vacant lot from $499 to $250, I can predict what that would cause, what effect that would have.
But we never really collected that money anyway, right?
Yeah, well, I'm talking about what the ones we collect. I'm saying just on the collection ratio that we collect, if it went from $499 to $250, what would be the difference what that effect would have on us? So you're still getting the same collection. We're not hedging for a higher collection ratio at the time. We're just using what we have available to us.
But again, the reality is we need more money from whatever sources it's available, so I can't
We don't know
imagine.
what that deficit is.
I cannot imagine that we're not going to increase this, regardless of what GAI says about the assessments.
I think that's accurate, but we don't know how much we need to increase it, so there's no point in really talking about it now until we know what the impact of the GAI is.
That was Omar and I's discussion. We're going to wait and see what comes in, but GAI is going to recommend a district base rate per category, okay? And then based on that recommendation, the board can look at that percentage increase that you've talked about, whether it's 3% or 5% or whatever the numbers are. If we were to go ahead and just increase 3% across the board without any adjustments, Omar, what is that number?
For water assessment.
No assessments.
So if we did a 3% increase across the board with our current rates, it would come to an $85,000 increase in revenues. 85,000, 3%. If we did 5%, it comes out to be 140,000. So I'm just doing the quick math. 5% on 673.44 or 99 right now, what we pay is a $33 increase a year per
homeowner.
Per homeowner. If we did a $2.50 increase for that same homeowner, it comes out to be $30. So it's pretty relative, but for the same effect, you get 110,000 in revenue versus the 140 on the other side.
Plus, you get a guarantee. You're basing, I believe, your assessment rate, you're basing on your collection rate as well, whereas in the case of the water, it's a guarantee. It's basically a guarantee.
Correct.
Okay.
I mean, I would like to see for the next meeting, apparently, since we can't seem to... All right, strike that. For the next meeting, what I would like to see is a chart from you guys on the electric bill or water bill, saying if we increased it $250, if we increased it $5, or if we increased it $750, or come up with 3 proposals so that we can actually look at it and make a decision based on what we know at that time. The same thing with the assessments. Whenever we do the assessments, I want to see, you guys have to give us guidance, whether it's 357, 468.
Yeah, and we will.
To help you, we traditionally have done that in the past.
Last year's budget
They've done that. They did 3, I think they did 3, 5, and
yeah.
did you do 7?
We didn't do 7, we did 3 and 5 last year.
3 and 5, and
That's how we
showed the
know
differences.
off the current assessment
Yes.
rates. So we give you graphs with figures that tell you what the difference and what the increase in revenue will be. But once again, we didn't want to give you a 3% at the current rates because those we might be proposing a change. So why give you an $85,000 figure if that might not be $85,000?
I know, but you keep saying that you're going to, we might be proposing a change. I thought this is a budget we're supposed to be doing
This is a
now.
budget, but that's in my memo.
Well, why do you keep talking about proposing changes?
We don't have that information yet.
Well, then why are we doing this?
It's muddled because of the GAI. We don't know what they're going to come back, and we don't know what the impact of that's
But
going to be.
GAI has nothing to do with the water bill.
It does if we need to increase this because of the magnitude of the decrease that you might wind up without a GAI. We just don't know. There's no point in doing this until you know it all. At least not from my perspective.
And we also are getting, I'm in favor of all this, but we're also getting hit for $106 to $115 for firefighters.
Well, yeah. I don't know where the outrage, there was no outrage downtown when that happened.
Should have been.
There should have been, is right. And anyway, Do you ever look at, just out of curiosity, in
Yeah.
terms of the water, have you looked at base rate changes as well? Not base rate, but gallon changes in the past?
Talked about it.
Have you?
Talked about it.
Yeah, we have, once again, when you compare them, what's sometimes makes it a little bit difficult is you can compare it to City of Sebring and City of Orange Park. The problem is that City of Sebring and City of Orange Park don't charge the base with no usage. So their rate might be higher when you actually use water, ours is a little bit lower. So you got to we try to take everything in consideration. And that's why we do this same apples to apples, 4,000 gallons, to try and figure out the difference.
I do not remember when I was commuting back and forth as a snowbird, so I'll ask the question. When somebody, if they don't turn off their water, do they get charged a flat monthly rate?
Yes.
They do, okay. That $25 or something.
28, something.
And in the City of Sebring, you turn off your water, you might not get a bill at all.
Okay.
So that's where the differences lie and why their rates might be higher and ours may be lower. So we do look at that, yes.
Okay.
All right. Page 48, start looking at the revenues. Overall 3% increase from last year's revenues. We've increased meter sales. Trends have been higher. We budgeted at $970,000 based off actuals and estimated actuals. Some of our impact fees and unmetered sales we've hedged a little bit higher just because we've seen a trend in new construction. So that's trending in the right direction for us. Flat rate, once again, stayed pretty consistent for the last few years. The only other major change that I've highlighted, connection fees, once again, attributed to new construction and interest income. We've been performing a lot better this year with some of the methods that we've implemented this last year. This current budget, the $400,000, is what we're needing to balance the budget. So we'll talk about what's included in that $400,000.
Why did you short, if you're looking at 2017 to 18,
Yeah.
on several categories, you're planning less?
Give me an example.
I can give you all of them: impact fees, miscellaneous service, connection
Sure.
fees. You want them all?
So impact fees and
But all those five, you're planning them at less
right,
than
and
this
all
year.
those are attributed to new construction. We can hedge higher. We don't know if next year will be as good as this year. We can try and use this year as a benchmark if you like. But once again, this is the first year that we've seen this much construction and what's causing those to go up. So once again, as these builders, if they don't sell these units, maybe they won't build as many next year. So if they do, then great. They will build more, and we'll collect more revenues. But there hasn't been a consistent trend for the last couple of years for us to give you a good indication as to what's going to happen next year. It's kind of been hit or miss for the last couple of years as far as new construction and what's going on around here. Page 49, going into customer service. Only one that really sticks out at you there is workers' comp. Once again, we've talked about that. Repairs and maintenance has gone up a little bit, about $2,500. This year, we're estimating to spend about $6,400. We have two major printers that we own outright, and they've got to be at least 10 years old, and they're starting to cause a lot of trouble. So we're looking at different alternatives, whether we'll do new leases and surplus those, or just continue to rehab them. And we're starting to track replacement R&M costs on that to see what makes the most sense going forward. Other than that, overall 3% increase, so it comes out to be about $8,000 difference from last year to this year.
Why would postage go up $5,000 more than this year?
Postage for the last couple of years has trended lower. So in 16-17 we spent $19,000. This year we're going to spend about $17,000.
And you're planning $22,500.
Yeah. So a lot of that is based off. We did go to the new bulk mailing, which has saved us a substantial amount. So we decreased that $2,500. We could probably hedge that a little bit lower, closer to $19,000 if we wanted to try and get it extremely close.
We can do that.
Huh?
We can decrease it to 19.
I mean, these are the kind of things, again,
Right.
I know they're small numbers,
Yeah,
but
that's
they
taking
could
into
add up.
consideration. That's taking into consideration the same amount of mailing going out, no increased No new construction. As mailings go up, more postage, more things come into play. So yeah, we did put some hedging in there, but
We're going to try to encourage more e-bills. I mean, we do that all,
Right.
we
Yeah,
encourage
all
that
that
as our
comes
new residents come in. We encourage, give us your email, let us
Yeah.
email the bills
And there's
to
always
you.
things that come into
ACH,
come into
draft,
play on
all
that
that.
line item. So one example is the CCR report that we mail out every year. In the past, what we've done is we have a company who'd come in, create the CCR and mail it out, and we pay them to perform that service. It was included in that fee and hit another line item. This year, what we've done is we've told them, go ahead and create the pamphlet, mail it to us, we'll include it in your monthly water bill, and now we're paying the postage on that ourselves.
Explain what that report is. It's an annual report put out for our water
report that
quality.
you get on an annual basis.
Yeah,
So there's
it's a lot.
things operationally that we're doing a little bit different that have been factored into this line item. That we're paying for postage instead of paying someone else to do the service for us.
If I have my bill emailed, do you still mail me the newsletter every
No,
month?
we take it off. It's only email.
For the newsletter and the invoice?
Correct.
Okay.
You'd get it through the e-news
Yeah.
blast.
Okay, that's fine.
So, yeah, as we try to promote that as much as possible, and that would save costs on that postage line item. So. Anything else in the customer service department? Page 50, operations, pretty consistent across the board as far as positions and salaries. Engineering fees, extra $20,000 been budgeted. We have 3 major projects budgeted for this year. One being the SCADA upgrades for Unit 4 and 23, Unit 23 piping for $110,000, and surge tank upgrades for $400,000. We've been using Craig A. Smith and Associates, so we put $20,000 in there for that. We've eliminated the valve replacements. We felt like that line item should have been combined with repairs and maintenance. Those are repair and maintenance items that the guys, when they come across, will just go ahead and repair. So that's been eliminated from that and combined into the repairs and maintenance section. And what we've done with repairs and maintenance, we had 2 sections for water and for sewer. So we had repairs and maintenance water, and then repairs and maintenance water mains. What we found is with district staff, when they would, order supplies or order repairs with a company, they would have a hard time differentiating what was considered a water mains versus a water repair. So what we decided this year is combine those 2 line items just to keep it consistent for staffing purposes, and so they can allocate it and code it appropriately. Next, I got testing. Water and sewer has gone up. John Martinez has advised. DEP has come back to him with new regulation, which is causing him to have an outside third party come out and test the water and sewer more frequently and then on more occasions. So we've had to increase those line items to accommodate that new DEP requirement. Chemicals has gone up $30,000. In my memo, there's a new, and I want to say it's at the Florida Avenue lift station, which is one of our main lift stations. We've incorporated a new chemical product,
That breaks down.
which we should have provided some good pictures, but when we first started this program, when you looked inside that lift station, there was grease buildup and debris. What the guys would have to do on a pretty frequent basis is, rappel down into that lift station, scoop all that stuff out, go back and forth and clean it out. Now with this new chemical, for the last 6 months, we haven't had to go down there at all.
We haven't had not one.
It breaks down all the grease, extends the pumps, the life on the pumps. It's just been increases safety for the guys not having to go down in that lift station. So it's been a very effective new chemical that we've established, but it does come at a nice premium in cost. I think we pay about $1,700 per month for that service to be at that lift station. We have looked at alternative options. We're still working with a few other companies and testing them out at different lift stations to see if we can get that price down and still get the same effectiveness out of that service. So that's the major reasoning why that increase is being there. And then once again, let's talk about the 100,000 and the 110. Those are the two main capital projects that we're budgeting for this year, the SCADA upgrades and the piping. And then the last two sections are for contingency and reserves. Contingency has gone up 21% to 44,000. That's based off a flat percentage that we do based off total revenues. 536 indicates the amount that's going into the Euro fund that we keep talking about as a savings mechanism. And then we also put an additional 12,000 in the impact fund reserves on an annual basis. And the last 400,000 ties into what's needed to budget from reserves.
The 519,842 transfer out,
Yes,
what was that for?
that was for the budget for the maintenance building project.
That was the final part of the make.
Correct. That was the final. We did the 1.2 in 16-17, and then the 514
Okay.
this year.
I just wanted to make sure that that was the correct.
Run by the Unit 23 piping for me.
Correct.
I see your what is that, first of all?
So let's go, if you have any more questions on this, if you're going to ask about the capital projects,
Oh, is that
let's jump to the capital projects, and there's a worksheet in more detail on
Unit
that.
piping? I didn't see that.
It's on there.
So on page 52, all the capital items, server upgrade 12.5, SCADA upgrades 100 grand, unit 23 piping 110, and the surge tank at 400. The surge tank, or the piping is on page,
That's the resurfacing?
it's on page 55.
55? Was that supposed to be done today? I mean, this year? Because I see $50,000 allocated in this year's budget.
Yes, so it was supposed to be done this year. With the timeline and everything that's gone wrong with the water plant rebids, we don't believe we're going to be able to get that project done. We still are working with our engineers to get good estimates and put the specs together so everything can go out to bid, but we don't think it's going to come to fruition until October in the next fiscal year.
So where are we with our water treatment?
The bid process, I believe that's coming to the board for recommendation at the next board
I'm
meeting.
planning on it. We've received bids, and we received 2 bids on that project. So we'll be bringing, that recommendation back to the board at June 22nd meeting.
Less than 500,000, I hope.
Correct.
We'll go back to the piping for a minute. Why was $50,000 allocated this year, and you're asking for $110,000 next year?
Right, that's a good question. So this year, we put in 50,000, we felt that was a good number. John Martinez in the utility department and the engineers are all working on getting us a hard figure. We expect this to go down. We've just put this in as a plug for right now, as a...
Why wouldn't you put the same?
But you doubled it. You doubled
Why wouldn't you
it.
put the same number in as?
Usually, if you do a contingency, it's like 10, 15% or
Right.
something.
Oh. Right, so, once again, I believe the first estimate came from Drew and his expertise. This new revised is coming from Craig A. Smith and all the dealings that they've had with the water plant rebid and their discussions with some of these contractors. So, yeah, it's definitely a significant change, but...
When we go into the budget process, like today, I wanted to have those quotes today. I also wanted to have all the quotes for the SCADA, but unfortunately, I'm not able to get that just yet. So, so those, sometimes our estimates may be too low. In this case, we feel it might be. But we are going to have some pretty good numbers, I'd say, within the next month on that. Unfortunately, it's just the timing of getting the information. So, sorry about that.
Okay, so, but we don't have, we have money from this year,
We
but...
do, yes. We have 50,000 currently in the budget. Was that your question? Yeah, we do have
Yeah, but
50.
you have $200,000 for the water plant, right? For that...
Yes. Yeah, we are going to go ahead and move forward with the water plant. We're going to be able to get that project finished this summer.
Okay, I guess. So can Mike explain to me the 400,000? The Unit 4
Okay.
surge tank upgrade.
I have some information on that. You want me to talk about that? The surge tanks at Unit 4 have continued to crack, and we have been cited by DEP on occasionally, when their site visits take place, that we need to fix those cracks, and we need to seal with the lining inside those tanks. Additionally, we are looking at bar screen improvements for that facility, and what that is, these bar screens are like the the first level to where, all the debris and all the rags and everything goes through. It will prevent, and we did this at Unit 23, and that has been a tremendous upgrade for that facility. It prevents all those big items like plastics and rags to get any further into the plant. So not only are we recommending the lining of the tanks, and that is, we have to address those concerns by DEP. That's number one priority. But additionally, we're looking at some bar screens that we want to put into that facility. And it's made a tremendous difference at the Florida Avenue plant.
So is 400,000 a conservative number? I mean, could it be less, or is it going to be more? Or,
We don't have a full engineering estimate yet, so I'm hesitant to say where that could fall. And so
where do we come up with the 400,000? I mean, how do we come up with it?
Well, originally, I talked to Drew, there was a company, of course, this has been in our budget. I think originally it was at $250.
Yeah, I
So
think
it's
Drew
been there
took
a
into
couple years.
consideration the
So
Unit
there was
23 project.
a company
and came up
called
with this figure.
Green Monster, who was pretty much a sole source company who came in. It was very, very expensive. It's like the Cadillac of liners and all that. And today, we feel that there's in market, there's other companies that could possibly provide us a product not as expensive. Now, is that reflected here? It's not. So, again, this goes back down to engineering estimates and bidding out the project. We
You
feel.
said 250, is that?
Well, that was years ago.
That was years ago?
And I don't think that
That was
included
8
bar
years ago.
screens.
Is this similar to what we did 2 years ago at the other?
Yes.
It is very similar.
And
Very-
we
except
ended
for-
up replacing, did we not replace all the generators over there from Trade Winds?
No.
We replaced the blowers.
Yeah,
The blowers,
Yes.
the blowers.
Yeah,
No-
The blowers.
Yeah.
Is that part, will that be part of this too?
No blowers in this one. This is just strictly getting all those tanks fixed and sealed.
Okay.
In addition to bar screens.
Do we remember how much that cost a couple of years ago when we did that?
Yes.
Blowers or the lining?
Well, it was all kind of a combined project. I'd have to look back on it.
I don't remember what
I don't remember off the top of my head, but it wasn't, I don't think it was 400,000 though.
Find out.
But it's hard to say. Okay. But it's a similar situation is what you're saying.
It's a similar project, yes.
But the tanks are bigger too, Mark, so,
Well, the others were cylindrical too,
Yeah.
aren't they?
yeah. So,
Okay.
So the blower installation that was done by Dalen, we awarded the bid at $133,000 for the blower installation and electrical work. That was just the blower. and
That was just blowers.
that was.
But that didn't include.
No,
So,
I don't know what it was.
Well, the bottom line is you don't know what it's going to cost. We're just putting a number in and,
I'm trying to put together a number so that when we do go out to bid, we'll have budgeted funds,
Right.
for the project. And Craig A. Smith will help us and prepare the specifications for the bid, and we'll bring that to you once we know what the project's going to entail.
right. But that all comes out of the utility fund
All of the
as
utility
opposed to
funds.
the other.
Yes. So I don't want to have Craig A. Smith move forward until we have budgeted
Right.
appropriations for it.
And there's a timeline that this has to be done because of Department of whatever.
And I don't know that they put a timeline, but as long as they know it's a budgeted project for the future, I think we're going to be okay.
Okay.
You might get one if we don't do budget.
Then,
What is doing?
so page 57 is a 5-year. If anyone has any questions on the 5-year and wants to make any changes, we can take a look at that.
Okay. What's the infiltration study, Mike? For 400,000, what's that?
Where are we? Infiltration study on page 57.
Yeah, okay, I'm looking at it, I'm looking.
that's on Unit 5.
Huh?
It's a Unit 5 infiltration study.
What do you like?
I don't have any details on that study. I know that Drew has it's been on our radar for quite some time, and with him not being here today. Mike, do you have any other additional information on it?
No, if I recall, the infiltration studies, they're going to go in and look at some of the old piping to see if
Where everything's leaking.
everything's leaking, debris,
And it's
dirt coming
They
in.
basically put a camera
They send
down
a camera,
and look
right.
at it.
There's a camera.
But it's focused
So
on
they're
that
gonna
side of the
go in and
community.
tell us what the problems
Oh,
are.
they go in there and seal it as well with that.
Right.
Oh, for 400,000,
Yeah,
they
right.
fix the problem?
Yes.
That makes it worth
As a matter of fact, that's what we're doing over on number 17 now. We're kind of sealing some pipes.
It's a lot of money.
Okay, since you brought that up,
There's a lot of money everywhere.
Oh, 17, he didn't, no, don't go there.
What?
since you mentioned 17,
Yeah.
I was so happy at the last meeting when you informed us that the problem wasn't as great a problem. KDL originally came in, they happened to be working, I think, on probably the station over there, lift station, and they took a look at it, and I was very happy that it was a minor concern. Now, can you give me an update where we are with this?
The catch basins are being sealed today. I don't know if you understand. The pipes are fixed, and the catch basins, there were 2 catch basins, were when they went in there and started to clean them, the bottoms were all rotted out. So we had to replace the bottoms, and then, of course, the walls are also cracked. So we have a company that, matter of fact, right now, are over there sealing them. It's the same company we use to seal our catch basins in the roads and stuff. It's kind of like a gunite. I don't know if you understand what a gunite is, but they force it in, they spray it all on, and they gave us a 5 to 10 year warranty on it. So, before
What they give us for a warning?
5 to 10 year warranty.
So is this just a stopgap? I mean,
Yeah.
this is not...
Well, usually they last a lot longer, but nobody wants to give you a longer,
And my question was, did you say 5 to 10 years?
yeah, warranty.
So it's only,
Not yours right now.
defined plus or minus 5?
It has to be.
It's a 5 to 10 year.
Let us find out. Let us find out.
No, it's a 5 to 10 year warranty.
What's that mean? They can say when it expires if it's after 5 years?
No.
find out.
Well, different companies come through. All the companies that we've talked to said it's a 5 to 10 year warranty. So what does that mean?
Can we,
But in
let
the
me
last
interrupt.
5
Can you get
years,
back
the
to
last
us
5
on it
years.
so that we have the clarification?
I'd like to
on
see
it?
that in writing.
Yeah, just so that you don't have the information now, that's not fair for you to have to answer it. So if you could get that information back to us. But my next
I'll get you
question...
the warranty work.
Yeah. My next question on that is originally, I think when we were so happy, it was somewhere around a $5,000 fix. Can anybody elaborate on
Okay.
where we're at?
The pipes are $4,400 to fix. The catch basins are $9,100 to fix. Okay? Now, when they originally went in there, they didn't know the catch basins were all cracked. Okay?
I get it.
Okay,
I get
so
it.
when they went in, they vacuumed everything out, they cleaned everything, that's when they saw all the cracks on the catch basins. So we're fixing that. Now, if we fixed the whole thing, it would have been over $100,000, to fix every pipe. But we sent the camera down there, and we didn't have to do it. So we only had certain spots cracked.
We don't have to do it in the immediate... Okay, I'm a little bit hesitant because I'm just trying to understand if we're going to be faced with a problem 5 years down the road, we should be addressing it now while we have the ground torn up. That would be question number 1. And question number 2, sounds like this is somewhere in the area of 20,000 plus, right? I mean, you rattled off about 14, 15,000.
About $14,000, yeah.
Okay. KDL did the initial, and because it was under $10,000,
They did the 4,200.
It was under 5 originally, the $4,400, right, Mike?
Yes.
For the pipes? Right, is that where we were before
Right.
the project started,
Right.
before we knew there was cracks?
Exactly,
Yes.
in the catch basins. And then once we went in there, we found how bad they were, so we called the company that we use a lot, and they come out and they said, oh yeah, it says, they can fix them, we don't have to remove them. They're actually they're not the ones that are usually set in, bought by a truck. They were built on site by forms, you know.
Okay.
You know, so it would have been a very expensive fix there. And I talked to Drew and John, and everybody agreed, let's do it this way, because we usually get a pretty good, when they give us the warranties, they usually usually last at least that long. I mean, you can't guarantee, you know, and we all know, you know, patching anything, and that's what we're doing. We're patching.
I guess things that are underground
Exactly.
are a problem, and you don't know there's a problem until
To a leak.
something leaks, and that's how we kind of, I believe, discovered the issue that we have. So I understand that, you know, we've all been involved, and when we get into a project and then all of a sudden you get deeper into it and you find out, wow, there's a lot more work that needs to be done. We were at the $5,000 range. Now, I don't know procedurally, how do we handle this? Tanya, you might be able to answer this. How do we handle when you come to the board, anything over, you know, up to $10,000, essentially, you can, $9,999 you can authorize. Over 10,000, we have to go to some 3 bids, and then over 25,000 an RFP. We're clearly over the $10,000 threshold. How do we handle that? I mean, KDL came in and said they were going to do it for X amount of dollars, and now it's going to cost us a lot more, it sounds like. So how do we typically handle that when they get in and they discover a problem?
This situation is going to have to handled as an emergency item. We can't leave the catch basin as it is. So based on the numbers that Mike has just given you, then I would have to approve it as an emergency item and inform the board president in the case that we do have an emergency that's under 25,000. So that's essentially what we're doing.
So it's an emergency, yeah, that's all I needed to know.
I'm going to have to be based on the circumstances. 2 days ago, I sent out an email from Polston saying that we're still assessing the situation. The company that came in to seal the concrete, you said they're working today?
Yeah, they're there right now.
Okay, and what's the name of the company, do you know?
Max.
Max Environmental?
Yeah.
Okay.
So it's just handled as an emergency because we got into a situation that we realized okay, that's fine.
We can't leave the situation coned, and we just can't leave it that way, especially with the heavy rains that we could be seeing, so.
I wouldn't expect that to happen. My concern sometimes is we get some of these unexpected surprises.
Right.
And that's my concern. Why do we get these unexpected surprises? And I mean, there's a million answers maybe why.
So what we do know is the pipes that are parallel to Hampton Woods and to the hole 17 area, they do have a few cracks, but they are open, and our drainage is flowing, and that is one of our that's the main drainage. Those 2 pipes are, how big are they? They're pretty big, aren't they?
40-inch.
Okay, so
40-inch long.
It's the main drainage that runs from Lake Granado right here all the way over to the other side of Deer. So we do know that. Those pipes are not collapsed. They're open, our drainage is going to flow, and so once we have this fixed,
we put a camera down it, and we only saw those 2 big areas that had cracks in them. That's what they went in and fixed. And then, of course, when we were cleaning out the catch basins, that's when we found out that was really bad.
Okay. The camera people being the people that are repairing it.
Well, we put our camera down it too.
Okay.
Yeah.
But
Polston did.
Polston did.
Right.
Polston did.
Yeah.
Now, okay, so Polston said they don't see any further cracks.
No, Drew didn't think, he thought it'd be okay. So, I mean, you can't tell. I mean, honestly,
I don't know.
it's underground.
So do we move money out of the general fund to cover this? Is that how it works? I assume there's no money to cover it right now, so you'll move out of the general fund, right?
There's money in our drainage repairs and maintenance to cover it now. That was not an expected repair.
Right.
And There was a little bit of savings on the budget when we did the Unit 2 bid for the culvert cleaning. We anticipated about, $60,000 on that project, came in at 38, 39. But we do have the money there to do the repair, and that's where it would come from.
Thank you.
Okay. Anything else on utility capital? Pages 58, 59, and go over our organizational chart. No major changes, no added positions. We're kept it consistent with last year. 32 full-timers, 12 part-timers, and then 5 board of supervisors. Page 60 has our current pay grade scale based off pay grades, minimum and maximums. And then the last section is the capital improvement fund. Once again, we've kind of touched base on this already. Once we get the bids back from the kitchen, we'll have a better grasp. We have set the preliminary budget at the $900,000 for the project.
And the contingency of $135,000?
Yeah, so I did the math on the contingency. It's set at 15% of the $900,000.
Okay.
For the next meeting, can somebody put on a piece of paper so I can see it, how we come out okay and set in 5 years, as you're saying we will?
I'm not
I mean, you
Sorry,
guys
what
are
was your
saying that
question?
we can cover all this.
We don't have a proposal for that. It depends if those capital items are going to be improved in the budget process. Our major concerns right now today is, of course, the budget capital improvements that we have in the 18-19 fiscal. And as we approve those future projects, then it's our job to come up with the funding recommendations for them. So I can't give you funding recommendations for $7 million. Well, I guess I could. I mean, I could come up with, unrealistic debt proceeds.
If we approve all this, because we've just gone through it, we've added. We took 8,000 out, but then we put the shuffleboard in, which is 50,000, so we've increased this number.
200,000.
Well, we've got 200,000 in the budget, hopefully
Right,
50,000 is cost. 200,000, so we've just increased this number by $192,000. And so my question is, where does that put us, and how much, so we can decide how much we got to cut. Right now, we haven't cut a thing. We just sat here for
Right.
5 hours and haven't
We're going to,
addressed an issue. We've talked a lot about stuff.
right.
So, this is not how I used to do budgets. I used to do budgets a lot. I went into a budget meeting and we cut budgets. We haven't cut anything. All we did was say we're going to talk about it.
The slasher.
We have to do it eventually. I guess
do.
I'm just confused.
At the next, we're going to have to bring forward some cuts at the next budget meeting.
Right.
We're going to have to.
I know we would.
And also, we're going to bring to you assessment, recommendations. Well, it's actually from the consultant, though.
Right.
And then we're going to have to bring to you, revenue recommendations, or we're going to have to cut through some of these departments.
Here's how I look at it. The golf
we're gonna-
revenue.
we're gonna bring that back
If
to
they
you.
adjust the golf revenue, they're going to get maybe 100,000. Maybe. The assessments, maybe you'll get another 100,000. If you raise the water 250, you get another 100,000. The most we're going to get is 300,000, maybe a little bit more. That's not even close to what we would need to cover this.
Correct.
So, we're going to have to...
Right, so your shortfall right now, the 1.7, once again, includes the 900,000. We know we can take that from reserves. We don't need to compensate for that 900,000. That's just coming off the top for our capital project that we're going to spend on. We know reserves are going down for that. That leaves you with 900,000 to try and compensate. You just found 300 in theory. So the question is, are we going to move forward with the kitchen, which affects expenses on the golf side, and it affects the subsidy? Do we cut golf capital? Do we cut general fund capital? Do we cut roads and drainage? Do we cut? Once again, that's where we're going to have to go down the road. Because once again, we can nickel and dime this thing, but it's not going to make a major effect until we start getting into those big, large numbers.
I agree.
You will be going, but they'll be, correct me if I'm wrong, you'll be going back now after you listen to the board and you're going to look at ways to reduce the budget. Is that a true statement?
That is a true statement.
So when you come back at the next meeting, when we have it collectively between operations for golf and the district, we'll have a scaled-down budget to then work on and see if we can make that budget work, correct?
Correct, that's correct.
Okay.
I mean, it's not one end or the other. You have to look at raising revenues, and you have to look at making sure your expenses are appropriate. I think the golf budget, and I missed the last meeting, sorry, I was in Alaska and didn't feel like calling in, but, you know, that was ridiculous what hit our thing, and frankly, I think Ray said he'd have been fired if he'd given his boss something like that, and I'm not dumb enough to have done that, so I probably wouldn't have gotten fired, but that just isn't going to work, and I think everybody knows that, so there's got to be revenue enhancements, there has to be expense cuts, and between the two of them, we got to get somewhere reasonable.
Yeah, and he came back.
I got his second missive as well.
The last meeting was not a budget meeting on golf, but he came back with some answers to questions. But it wasn't a budget meeting, it was a discussion, and he still needs to sharpen his pencil and come back again, because those numbers something isn't right there.
So I understand. Again, this is my first time going through this process, so it's a little different. So you guys next time are going to come back, and for example, because the biggest issues we have is with capital, right? We probably all would agree with that.
Well,
the other ones, you can, you change, massage them and what have you.
Well, we have the first issue is the operating. We have to balance our budget with the current revenues that we anticipate to receive.
Right.
We do not want to dip into reserves for operating purposes. So
Good.
that's our first challenge.
Okay, that's
the
good.
subsidy, all of that's going to be our challenge. The subsidy, yeah.
Which takes into consideration the kitchen. That's going to be huge. Until we make a determination where we're going with this kitchen, they can't adjust their budget for the closing.
I thought that's capital, is it not?
Well,
their budget is affected by that because they're expecting the closure.
Yeah, the loss.
So the closure causes their subsidy to go from $300,000.
Can you make everything balanced with the exception of the capital?
we can. We're going to have
This
to.
isn't once again, it's not
we're
a
going to have
capital.
to.
This is
It may be
operating.
ugly, but we can do that, yes. Yes, we can.
With the exception of the capital.
With the exception of the kitchen or exception of all the equipment capital? Because what we want to do in a budget, we want to be able to, our revenues want to be able to cover our operating costs plus equipment replacement costs. And that would be my recommendation. Excluding the kitchen, we can pay for that reserves, but we can bring back to you a balanced budget
Without the kitchen.
without the
I'd like to see that.
the kitchen. Well,
So
the
you're gonna
kitchen's
come
not
back-
really.
You're gonna recommend, in other words, when we get to like the roads, we were talking about the roads before, and that's $2 million or whatever, are you gonna actually come back and say, we recommend that we change those numbers to this? To reduce what the...
Or revenues are going to increase. Yeah, one of the two.
One of the two.
Right.
Okay.
Any further
are we-
discussion?
I think what might help, too, if, when you give us all the stuff, and if we have a lot of questions, you guys are available, aren't you? Because,
Of course.
Every day.
man, I'll tell you, for me sitting here, and I ask a lot of questions before we get here, and you answer a heck of a lot of questions I already know the answer to. I mean, and so if anybody has any questions, ask them before the meeting, and then you might have a better clue of what's going on, and then we can...
Well, and sometimes people don't realize to ask a particular question until they're here, I mean, not everybody has all, or they ask different questions.
Some of us were not here. We were out of town.
Well, this isn't just this meeting.
But anyway, any further board discussion? Public comment. We have one person out here, and he's been waiting patiently. I can even give you an extra minute or two.
Dave Alvig, resident. I know you guys are chomping at the bit to get the hell out of here, but I got a immediate cost savings. Turn the AC up about 3 degrees, so you could butcher in here, for one thing, and turn the lights off. It's daylight. But that's not what I came up here for.
Okay, you just used
But I
1
thought
minute to get
I thought I'd mention it. I remember, and Mike brought this up, I'd forgotten about this fire assessment increase, or fire tax that were $115. And so remember the rank and file out there, including myself, talking about a golf membership increase. It's probably going to be, if this food minimum thing holds up, just looking at it on the surface, might go on a family membership up. It would increase your membership 20%, 20 to 25%. You're going to increase assessments. There's no doubt that's going to happen. Utility rates are going to increase. There's no doubt that's going to happen. So remember, you're burning 40% of your general fund reserve with this budget, and then you're going to have all these increases coming. So remember the rank and file, including myself out there. And I got a couple questions that just surfaced on this. The county payment for maintaining Sun and Lake, you say that stopped? I can't remember it stopping, or it shouldn't have stopped.
I don't know if it stopped or it actually started. I have an interlocal agreement. When I first started at the district, there was an interlocal that I had seen, but we never had received revenues. Come to find out, that particular interlocal may have been updated and it was supposed to be
I thought it was still going on. If it's not,
it hasn't been.
If it's not, you need to send them a bill.
Well, since I started at the district in 2011, I do know that we had not received any maintenance payments at that time, and there was no board-adopted interlocal agreement to continue the maintenance. I do know that. So there used to be one, and maybe it was updated and not approved by the board. I don't know why. That would have to be some research.
But there was probably a timeline on it, and it just stopped, or they just stopped paying and nobody said anything. That sounds to me like that's probably what happened.
I really don't know. I'd have to take some research to
Might not
go
be
back.
a bad idea to research it, and if they owe us money, we need to
Prior to
try to get it back.
2011.
prior to 2011.
Omar, you were saying something about getting burnt by some of these people not paying
The water bill?
on the water bill?
Yeah.
That shouldn't be happening at Tanglewood,
Tanglewood, it does not happen. Tanglewood.
because they pay that.
Yeah.
Okay, I just wanted to clarify, make sure that contract's. Anyway, that's all I've got.
Really?
Thanks, guys.
Thank you.
Said there was still a long time to.
Oh,
Did Bill give you some notes?
Pardon?
Did Bill give you any notes?
Tom, anybody, you sure you?
No, no.
Tom, you mean?
No, not
No
really.
notes? Okay. Thank you. No further discussion?
Well, you got two on the board.
All I did to and from, but we'll do it again.
I have a couple things. Omar, or you or Mike, I hate to keep picking on this Gus, but, or is it Gus, the guy in Granada?
Yeah.
But you see his yard lately? I mean, he's not even cutting his yard.
He's out of the country.
Well, I think he's back, because I think I saw him, but he
Oh, you
wasn't,
did see him? Oh.
when he was in country, it looked no different. I mean, he does not own a mower or does not pay anybody. I mean, and I hate to, maybe it'll start, but his yard is just a mess.
I'll be honest with you, Mike, we cited him once or twice, and he comes in here, and he'll come in the office, and he'll complain we're picking on him.
Well, I know
Right,
that.
and we have cited him, just so you know that, for as long.
Continue to cite him if he's if he's violating the policy or codes. You keep citing him and let him keep complaining, because you know what? As long as it's a valid violation,
It has.
then
He's got 3 to 4 foot weeds.
I know.
I mean, it's just, I mean, I look at that, I start laughing.
Yeah.
I mean, he's not even attempting to mow his yard or to do anything there.
Well, it's the same way trying to deal with him building a home.
I understand that.
Same thing.
And I don't have any answers, but
Yard.
It
but
doesn't make
next
it
time he
right.
comes in here and starts screaming and yelling, I might stand up and scream. I mean, the guy is he's a mess.
Well, he'll be in because we cited him on another place too,
Okay.
just so you know.
And when's the dog park officially going to open?
We've got the concrete work and we're waiting for the signs to come in.
So it'll be, a month yet?
Yeah, probably
Okay.
a couple weeks.
How's the benches
We haven't
coming?
ordered any signs yet.
benches are in.
Let me clarify.
Where are
What?
they?
We'll go over there and sit.
Where are they? They inside the dog park? We
Yeah.
didn't put them out.
No,
I just had a couple of people ask me if it's open
yeah.
yet. That's all.
We're
And-
we're waiting for the signs and Ariel's actually working on the rules, so.
Oh, okay.
You know, we still have the dog park. The dog park accessories are still in the budget for 2,000 from a year or so now. You know,
Okay.
I mean,
I could tell them 2-3 weeks, then.
Yeah, 2-3
Okay.
weeks.
tell them the accessories for the dog park will be there in 2020. That's what we have in budget.
Yeah, yeah. I don't think they're asking about the accessories, they just
You need.
Huh?
And my other question is about, and this is probably to Tanya, but are we going to have Ron or our new GM start talking to the supervisors about what's going on? I mean, I heard yesterday from a guy on the golf committee who wanted to know if I wanted some information on what's going on the golf course.
Yeah.
And I'm going, what do you mean what's going on? He said, well, I got pictures and stuff. I mean, nobody is communicating with the supervisors at all. And I guess we're doing it through the golf committee now.
Yes, let me send Earl, should have had an update to the golf committee this past Tuesday.
On what?
Well, yeah,
I don't know,
I
just-
think he did, but doesn't he?
Okay, so
doesn't he
I-
talk to the supervisors
Well, that's a
first?
whole nother subject. You want to, you don't want to.
I don't get the minutes anymore, I'm sorry. Well, the
Earl had
minutes
an
wouldn't be
update.
finished, but the agenda,
I wasn't
do you
there.
want an update from the golf committee meeting? I
Well,
can certainly
no,
get
not
that
the
to the
golf committee
supervisor.
meeting, but somebody on the committee said they had pictures of some stuff that they were going to do and from
Yeah.
the
Let me-
meeting.
Let me
I don't
bring,
have
let
that
me,
information.
let me address that, because I was at the meeting.
Okay.
Earl, and we have a problem that has to be addressed. I'm just going to say it like it is. Earl has taken upon him, Earl has done a lot of very good things for the golf course, but he has taken it upon himself to do things that perhaps I think he should have gotten a partner with, whether that partner be the board or whomever. For example, on hole number 5 on Deer Run, he actually altered the hole by changing where the cart path is by the lake. Not saying it was a bad improvement, but he did it on his own, and I don't know how somebody could change the look of our golf course without telling us about it first. I mean, that became a question to me, and that was some of the pictures, Mike, that you're referring to.
Oh, okay.
The other, because he showed us a picture of before, and I have it at home, but it was a picture of before and then after what he did to it.
I
So you
couldn't
said
remember
altered-
what it was.
we altered the hole?
He
The
took
hole
away
was
the
altered.
concrete cart path and kind of moved it to the right, about 15 or 20 feet, and replaced it with a gravel cart path. Looks good. I mean, I'm not saying that we
Yeah.
would have said no, but he did it without, in my opinion, a partner.
And I don't have a problem with anything, but we were so used to Jim talking to us, we knew what was going on. Now, I mean, I have no idea what's going on, and it seems like we've switched who's doing what. I mean, it's completely, I mean, I would have thought I would have known about number 5 or so, pictures of it, but I hear from a golf
Yeah, I didn't know about it till the
I mean,
meeting yesterday.
and I don't think it's probably a great idea, but it's just the idea of, we have lost complete communications with the golf, with Billy Casper Golf, the supervisors.
Okay, that
Yeah.
point well taken, and I agree. We
Yeah,
have
I'm
not.
dumb enough on my own. I don't need somebody making me look stupid.
As a follow-up to that, and because he's done so much, in my mind, he's done so much to improve this course aesthetically as well as many other things. But there is a point in time where you kind of have to reel some people back in and say, well, wait a minute. No, I will tell you, and I don't know if it's going to happen, but I have a concern that they're going out there and starting to cut down trees. It hasn't started yet, that they will be going out there and cutting down trees. And, you know, I don't know that they should just automatically go out there and do that. I think they should, and I'm not saying it's happened yet. It hasn't happened yet, but, you know, all the trees are marked and all of that. He's already discussed marking the trees, and they talked about the phased-in approach 1, 2, and 3. You know, we need to have that discussion with the board to try to get a feel or an understanding as to what they're doing. Just like when they do a T construction project for $35,000 or $40,000, that always came to the board.
Yeah.
Okay, Ron Garl might have come in here and did the initial.
Why, I don't, Mark,
I think that before we start cutting down, because some trees were already cut down on 5 as well.
yeah, there was a couple.
Okay, so was it an improvement? In my mind, it was an improvement. So I don't want, but people need to understand that. If you get a phone call or an email and say, what's going on the 5th hole, and you say to yourself, if it's an email, you can go and research it. So I drove out there and checked it out.
Yeah.
But
I agree.
I was a little surprised.
You have not been receiving the communications that you
I
should.
don't blame
You were
Earl a
with me
bit.
yesterday, weren't you?
No.
I don't. Earl's not the problem. I think Ron is the one that should be talking to us.
I'm going to meet with Ron today, and we need to provide you an update, and it needs to be weekly, or at least bi-weekly, on any improvements that they're looking to do, or we need to be here talking to you about
I mean, he's been.
any upgrades that are
We've
going to
been
happen.
without a manager.
Before they happen.
We've been without a manager. He was a fill-in. I understand he's wearing multiple hats, but I don't think the communication has been good at all. I think the budget process, the next budget that comes to us will be like the very first budget, as far as I'm concerned.
And
Meaning the very first budget, like, there was no preparation in the first, there was hardly any preparation in the second Q&A, so I'm expecting that when he comes in on this combined budget, he is going to have these things nailed down so that we don't spend 5 hours on it. You know, and if you can't do that, then, you know, I have some serious concerns.
just so if it gets back to him, I have no problem with Earl. The problem is that the acting general manager has completely left the supervisors out on a limb. And not just for a couple weeks, it's been the whole time since Jim, and we were used to, you know, Jim would call us or let us know what's going on, and now, heck, I can't wait to hear what's going on at the club here, because I have no idea. I'm supposed to know.
The bottom line with Earl, he communicates better with the golf committee than he does with the board of supervisors.
Well, and he needs to know that whether he likes it or not,
I'll
Ron
take care of
needs
that
to
today.
go here.
I'll take care of that today, yes, sir.
Yeah, it's an unfortunate circumstance. I think that what happened, I totally agree. I think he does a great job. I don't know if he's maybe so used to private industry that maybe he's had that flexibility and leeway to go off and kind of do some of those things. You know, I asked Ron, of course now we have Cliff on board, or coming on board, I think, sometime this month.
Earl told us yesterday, it's next Thursday.
Okay, so he'll be here. But my train of thought, actually, I asked Ron, can you kind of give us a little bit of an idea when you're going to be in town, so when I have questions I can ask. I received, I don't know, maybe these people, I received once kind of when he was going to be in town, Monday, Tuesday, Wednesday, and then I never ever heard again. And you know what? I've been here 9 years, and for 9 years, that's what I've heard. So, and I have no problem telling this on an open forum. You know, they got to start doing their stuff again, or we'll be in the same situation as we were last year, potentially looking for another management company.
Understood.
Can I make a general observation?
Yes, sir.
You know, I've only been on this, on the board for 6 months or 7 months, whatever it's been. It seems longer than that, it does. And I have a concern, and I'll just say my concern, and you can all think I'm crazy and go about your business. I don't believe that the Board of Supervisors is running the community or running the district. I just don't feel that we're doing that. I feel that it's being run, and we're kind of there, and people are telling us stuff, and we're hearing it, after the fact, so forth and so on. I mean, it's just my personal feeling. And I think we've got to make that change, or make a change, that we are the ones in control. And I don't feel that we are, for lots of reasons. And I think we have to get together, both sides, and come to an understanding that, we've got to make the decisions. We're the decision-making body, as far as I can tell. And everything should run through us. We should know everything that's going on. To Mike's point before, anything that's going on with anything, we ought to know about it, I think. And I don't believe we do. So I just wanted to go on the record as saying that.
Any further?
Can we, real quick, on the dog park? The dog park rules and regulations?
Yes.
I'd like to mention to the board, the regulations for the pool and the tennis courts and our other district facilities have, the policy and procedure, or the rules and regulations have been adopted by the Board of Supervisors on those facilities. What I did do is reach out to President Camp, and I showed him a resolution for a previous rules and regs, that was approved by the board. We're discussing it now, but I'm thinking it would be a good idea for the Board of Supervisors to adopt the policy or the rules and regulations for the dog park at the next meeting, so we can open it, early July, or even before then?
Yeah,
that's...
And it's like 5 or 6 lines or 10 lines. It's not a convoluted, it's, when you receive it, you'll be able to look at it and say, yeah.
And it's a free park. It's not as complicated as the other facilities where there's rates. So we did have that discussion. I'd like to bring forth the policies on that park. So we don't have any signs yet. We don't want to make the signs until the board looks at those rules and regs.
That's fine.
Okay.
I'm in agreement with it, as long as they are.
Okay.
No, bring it. Any further discussion?
Okay.
Better do this quickly. Meeting's adjourned.